Chat. 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 I'm trying to summon the chat. I'm trying to summon the chat. Let's go. Let's go, chat. Doesn't it feel good, chat? Oh, there's no one here. There's no one here yet. Doesn't it feel good, chat? Can you feel it? Can you guys feel it? Let's go, chat. Do you guys feel it or not? Now, obviously not. There's nobody here. Where's the chat, bro? Where's the chat? They said it wasn't gonna work. They said it was going to 14. They said it was going to 18. Then they said it was going back to 20. Look at us now. Look at us now. Oh, man. Oh, man. Devin Toops. What's up, bro? What's up, Devin? How you doing? Hope everything's well. Hope everything's well. Let's go. Let's go, chat. Spreading Tesla for the earnings. That's chill. That's chill. I mean, you know how I feel about trading earnings. I think it's the most beginner thing you could do, but good luck. Good luck out there, sir. Good luck out there. Oh, I don't care what it is. If you're betting on earnings, you're probably that's not a trading strategy. The only way trading earnings works is if you buy extremely cheap options that can go up like a lot. But even then, it's not great. Better off just trading shares. That's the spread? Nah, not a spread. Like a far out the money option that the market doesn't think could hit. Spreads are... I'm not a fan of spreads. Puts and calls. Yeah, see, I mean... Bro, that's ridiculous, because if you're betting on both sides, you're gonna lose on the put side, and then whatever side it goes, you're gonna lose on the other side, and just break even on the other side, or on the side you win. Like, it's... Trading earnings is dumb, bro. Trust me, I've done it a million times. I think it's the dumbest thing ever. Moose! What's up, Moose? You aren't talking to someone who hasn't not traded earnings. I literally traded strictly earnings for like a year or two. It's not it, bro. It's not it. You're supposed to trade to have the odds in your favor. Trading earnings, the odds are never in your favor. You're just gambling. And if you can admit that you're just gambling, that's perfectly okay. But to try to like justify that it's a good trade, I can't get behind that. I can't get behind that. If you're trying to justify earnings as a good trade, that's just not it. It's just not it. What's up, Moose? Alright. I think there's a couple articles. I am going to read a couple Avis articles as well, because the Avis video did okay. So I do want to do a couple Avis videos. Or a couple Avis articles, whatever you want to say. And it looks like there's some GameStop articles as well. Ooh, yeah! Had an unintentional low-carb lunch, forgot the half my food. No. 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 That sucks. That sucks. You hate to see it. You hate to see it. They added a few new articles here. And then we'll do Avis. Whoops. I don't know which articles we'll read from Avis, but I'll try to find some. It has to be a volatile stock. If the stock's volatile, the options has that priced in. So, like I said, you're not talking to someone who hasn't, like, I know how trading earnings works. Like, I don't know. You're talking to the wrong person if you want, like, sympathy or, like, sympathy's not the right word. What is it called? Like an echo chamber. I know that's not the word I'm looking for, but if you're looking for an echo chamber, you're in the wrong stream, because I think trading earnings is like literally the dumbest thing ever. You're in the wrong stream if you want like an echo chamber. I shouldn't even say I think trading earnings is the dumbest thing ever. I know trading earnings is the dumbest thing ever. Okay, and then there's at least a Seeking Alpha one I want to read. Oh, now there's two. RIP. Shorts are running out of options. This one has 100 comments, so I think we'll go with that one. I don't know. Sell both Avis and Hertz before the. See, I don't even think that guy's article is gonna be good. If you're telling people what to do with their position, you probably don't write good articles. Oh yeah, this one should be good. I just don't have any like opinions on Avis, so it's whatever though. Is by chance can I open two articles? No, of course not. Of course not. Okay. I like how there's like nobody here. Isn't that great? GameStop's just absolutely crushing and nobody's here. I love that. I love that. People are talking about other stocks. Like, wait, what about GameStop? That's one of the articles we read. What's this one look like? I think no. Avis shares reach new highs mid short squeeze. They are piling in on car. Well, they're cooked if they're piling on car. Car's down like 15% today. I don't know if the squeeze is over or not, but that thing's down quite a bit. Car to the moon, baby. Let's go. Car to the moon. No, seriously, if you're trading car right now, I mean, if you're day trading, that's a totally different thing. But if you think you're gonna like position in the car, fuck, good luck. Good luck. I mean, this is like a. I don't know if I want to read that one or not. I'll have it open. It's a maybe. No. I think this is one I wanted to read, maybe. Where is everyone today, man? It's pretty hype day, I feel like, and nobody's here. I mean, I won't complain because it's pretty cool, but that one could be okay. It's just whack. I give I talk about the play of the generation for a full year and a half and nobody cares. Is what it is, I guess. Is what it is, I guess. What's up, Risk Take Live? How you doing, bro? All these articles are just like referencing the Simply Wall Street articles. I think that is so dumb. We've literally like see, that's also why I want to cover other stocks, because reading the GameStop articles over and over again, it's just the same fucking shit every time. It's like it would be nice to cover something else. So hopefully Avis is hyped for a while, because, you know, covering that for a little bit would be nice. On top of the GameStop. What's this? A Polygon article. Oh, this is about the physical power packs. Okay. Oh yeah, physical power packs is out, isn't it? I forgot about that. What's up, Hugh G? How you doing, bro? How ya doing? Benjinga. Maybe that one will be okay. I don't know. I was debating bringing some Chinese slab I have to GameStop to trade for store credit for a physical power pack, but nah. Yeah, I mean, just buy the physical power pack if you want it. The physical power pack's actually a good deal. Like if you compare it to digital power packs, because to pull, you know, a $29,000 card on digital power packs, you would have to pull I think the 2500s, maybe the thousands. I think it's the 2500s though. Whereas, you know, you can buy that $150 physical pack and potentially pull a 29K card. Like when you're comparing it to digital power packs, it's actually a good deal. And they automatically will, like, for the till May 2nd or something like that, they'll give you $60 trade-in credit for the card you get in your pack. So automatically you're getting at minimum like $90 of value. So it's actually a pretty good gamble, I would say. I'm not gonna get one because I'm a brokey, but it is a good gamble. Like if you get a good card in that, pays for itself, really. I mean, if you I mean, the fact that you can get a $29,000 card is crazy. For $150, or, you know, potentially get a $29,000 card. There's actually a lot of GameStop articles. I guess I should have started the stream a little earlier. Isaiah, what's up, Isaiah? Hope you're doing good, bro. Hope you're doing good. Good to see ya. Good to see ya. Did I read this already? Holy shit, there's so many good articles right now. What the hell? There's usually like never good articles. That one's not good. GME stock on track for best intraday gain in 10 weeks. Let's go. Let's go. Let's go. How long is left for the Tesla earnings? When the market closes, like every earnings. Well, I mean, some companies report in the morning, but every company that reports after hours is when the market's closed. Yeah, see, that one could be good too. Quite a few good articles for GameStop. Let's see if we can get any Avis ones. I feel like there's going to be a ton of Avis ones, but it's just going to be tough to find which ones, like... I want to read this one, but you can only read one Seeking Alpha article a day, unless you have the sub. I want, like, a description of how it squoze or something like that. Like, I want to look for something along those lines. See, I don't think that's a good one. Why this car rental company stock climbed 700% in a month. This could be a good one. It's a Forbes article. This one could be decent. Holy ads though. Like, what the fuck are these ads? I don't know if this Forbes article is good. That one doesn't. And there's just too many ads anyway. There's got to be an article that has like a good analysis of like what happened and like all that. Michael Burry calls it dumb luck. I mean, I don't know. If you were in Avis, sure, is dumb luck, but if you're trying to trade Avis, you're not very lucky. Do you mean when the US session ends or when the whole market is closed? When the US session ends, I guess to me that's the only market that matters. I don't really pay attention to the other markets. So, yeah, when the US session ends, which is in like an hour and a half. I'm not seeing any like good articles about this. Surge record high. See, there's just like no good articles about it. I thought I saw one yesterday that I thought was interesting, but I just don't remember what website it was on or what the title was. Should I short it now? If you're going in random live streams to ask what you should do with your money, you probably shouldn't even be trading on the stock market. You should probably go get a job or something. Try thinking for yourself. Touch record highs, short squeeze, bearish bets. What was that last one on this one? No. All right, whatever. If you guys can find a good Avis article, let me know. But I got a ton of articles to read, so I'll at least read this one first. Make sure you guys hit the like button. I don't know why. I don't know why I have to ask that every time at this point. All right, let's get it. Avis budget. Shorts are running out of options. Avis budget surged 500% in 5 weeks, driven by an unprecedented short squeeze rooted in extreme float mechanics. 2 hedge funds, SRS and Pentwater, accumulated over 100% economic interest via shares and swaps, locking up 82% of CAR's float. Short interest exceeded available float, triggering a gamma squeeze, as dealers and shorts scrambled to cover, further fueling the rally. Despite macro tailwinds, CAR now trades purely on market structure, not fundamentals, at $600+. Neither long nor short is sensible. That's something I can agree with. I think unless you're day trading, I think there could be a lot of opportunity day trading something like this. But if you're trying to position, good luck, man. I mean, good luck. That's a tough trade if you're trying to swing this. Avis budget closed at 608 on April 20th, up about 500% in 5 weeks. Yeah, I think it hit $850 in the morning, and now it's trading around like $650 or something like that. I don't actually know. What is it trading at? 541. Oh wow, it's actually selling off quite a bit now. I'm writing this because what is happening with this stock right now is, in my opinion, the most fascinating event in the equity market since the Volkswagen short squeeze in 2008. Wait, what about Gamestop? What about Gamestop? I mean, the Volkswagen short squeeze is really impressive as well. I think many people watching it do not fully understand the mechanics behind it. If you have been following this story, you probably already know the basics. A heavily shorted rental car company got squeezed and the stock went parabolic, but the story is not that simple. Well, I don't know the story. That's why I'm reading this article, and thank you for writing it. Hopefully this guy gives good analysis on why this is happening. 2 hedge funds accumulated over 100% of the Avis economic interest through a combination of stock and swaps, and then one of them pulled the trigger on an options expiration date that forced the other side to deliver shares that did not exist in the open market. Oh, very interesting. I mean, very similar to GameStop, right? And I guess Volkswagen. In this piece, I will walk you through exactly how that happened, step by step, because I think the mechanics are important, and I have not seen many people explain them properly. Well, God bless you. What's this guy's name? Doug Collins. Shout out to you, buddy. Let's get it. Now, if you are wondering how it is even possible for 2 funds to own more than 100% of a company, so when a short seller borrows a share and sells it, the buyer on the other side now also owns the same share. So the same share gets counted twice, once by the original lender, who still shows it on their books, and once by the new buyer. That is how total ownership across all holders can exceed 100% of the shares. And then they got a little diagram thing there. Here, I'll increase it so you guys can see it. Whoa, a little too much there. All right. On top of that, total return swaps give you the economic exposure of owning shares without actually holding them. So when SRS and Pentwater combine their direct stock holdings with their swap positions, their total economic interest went above 100% of the company. They do not own more shares than exist, but economically they control more than 100% of the upside and the downside. Very interesting, very interesting. What does Avis actually do? Before we get into the squeeze mechanics, let me quickly cover the business itself, because understanding why shorts were so aggressively shorting is half the story. Avis Budget Group owns the Avis, Budget, Zipcar, Payless, and Apex rental car brands. They run a fleet of about 684,000 vehicles. They report earnings in 2 segments, the Americas, which makes up about 76% of revenue, roughly $8.9 billion in 2025, and international, which covers EMEA and Asia Pacific, at around 24%. Now here's the part that mattered for the shorts. Their fiscal year 2025 was ugly. Revenue came in at 11.65 billion, down about 1% year over year. They posted a net loss of 995 million. Diluted EPS was negative $25.26, and adjusted EBITDA of 748 million missed prior guidance of roughly 900 million, entirely on the Americas side. The Q4 fiscal 25 report, which dropped on February 18th, was especially bad. They reported a 856 million quarterly loss that included a 518 million write-down on the US EV rental fleet. If that sounds familiar, it's basically the same mistake Hertz made with Tesla in 2024. On top of that, America's segment revenue per day was down 4%, and per unit fleet depreciation went to $338 versus prior guidance below $300. By mid-March 2026, car was the most heavily shorted stock in the Russell 1000, and if you looked at the fundamentals alone, it was easy to see why. S3 Partners said that 49% of the available float sold short by mid-March and went up to 54% by the end of the month. That was about 9 million shares short against a publicly tradable float that was arguably smaller than the short position itself. Due to the smaller float, the days to cover reached 7.3 and the borrow utilization hit 89%. As a result, cost to borrow went from sub 1% in early February into 3% to 4.25% range. The short case looked ironclad. Their total debt went to 28 billion, roughly 19 billion of non-recourse fleet ABS, and only about cash of 524 million in cash. That's their long-term debt. That's cash short-term investments quarterly, so pretty low. Used cars prices were softening, which threatened the per unit fleet depreciation math even further. The Q4 EV impairment confirmed that Avis had basically repeated Hertz's Tesla mistake on a big scale, plus autonomous vehicles capped the potential long-term demand. On paper, this was a good short thesis. A dying business model, drowning in debt, and losing nearly $1 billion a year. In my opinion, the shorts were right about this business, but they were catastrophically wrong about the float. Very interesting, very interesting. I mean, that's why shorting is so dangerous, I suppose. You can be 100% right about something, but you can still get absolutely wrecked. Where shorts were wrong. Avis has only 35.26 million shares outstanding. Wow, that's not very many, which is a very small share count for a company this visible. And of those 35.26 million shares, a huge amount were already locked up before the squeeze even started. SRS Investment Management had held a position in Avis since 2018. By the end of last year, SRS controlled about 49% of the economic interest. In September of last year, Avis had even amended its corporation agreement to lift SRS's voting cap from 35% to 45%. So right there, nearly half the company was locked up by a single fund, and these shares were not going to be sold. Then you add roughly 10% held in passive index vehicles like Vanguard or other ETFs. This is interesting, actually. Shout out to Doug Collins. This is a really good article so far. So before the squeeze even started, somewhere around 59% of the shares outstanding were basically off the table. The actual tradable float was maybe 14 to 15 million shares, and against that, 9 million shares were sold short. More than 60% of the free float was short, and then a second hedge fund showed up and took most of what was left. Pentwater lit the fuse. Pentwater Capital Management had been accumulating its Avis stake through 2025 and disclosed a 12.3% position of 4.33 million shares on February 13th via Schedule 13G/A filing. But between February 20th and 24th, just 2 days after the stock tanked on the 856 million quarterly loss, Pentwater bought 425K more shares at an average price of around $94.26. They sold puts expiring March 20th at strikes of 110, 120, 125, and 130, and they bought September 18th expiry calls at $80 and 85 strikes. If this structure reminds you of something, it should. This is similar to what Porsche did to Volkswagen in 2008. Physically settled options that force share delivery, plus cash settled swaps whose delta has to be hedged by dealers in the open market. Every time the stock goes up, the dealer has to buy more stock to stay hedged. It is a feedback loop kind of situation. In my opinion, the March 20th expiry started this whole cascade. On the monthly options expiration, Pentwater exercised all of the in-the-money puts. This forced the other side to deliver the shares in huge blocks, including a single 1.2 million share tranche at 110, plus additional blocks at 120, 125, and 130 strikes. Dude, this is very impressive. This is a very impressive article. This is some good research. I wish I had more to say, but I just don't know anything about Avis. You know, all of this is pretty new to me. I don't pay attention to this stock. But very interesting. This resulted in borrow evaporation that pulled millions of shares into holdings that are not available for lending. The cost to borrow went to about 3.88%, which is roughly 13 times the general collateral rate. If you are short and the lender recalls them or the broker cannot locate replacements to cover the borrow, you face a forced buy-in. This also created a gamma feedback loop. Dealers who were short Pentwater September 80 and 85 calls had to buy stock as delta went up. At the same time, delta hedges on the synthetic long swaps added more buying pressure with every leg up. This created the gamma squeeze loop where price going up forces more buying, which forces the stock to move up and so on. By the end of March, Pentwater's reported stake had reached about 22% or 7.8 million shares. Now combine that with SRS's 49% and the roughly 10% in passive index vehicles. Roughly 82% of the shares outstanding were locked up by holders who were not selling, against 9 million shares that had to be delivered to close short positions. There were more shares sold short than there were shares available to buy. See, that is pretty... I wonder... I mean, I don't want to bring GameStop into this, but I think GameStop's in a very similar position, just with a much larger float. Like, a lot of people who are acquiring the stock today probably will never sell. And a huge amount of the stock is owned by, like, Ryan Cohen and, a lot of other people. Roaring Kitty, Michael Burry. They all have huge positions and probably will never sell. So if there's someone out there making, like, large option trades on GameStop and something like this happens, that would be pretty interesting. A macro tailwind made it worse. And then something else happened that nobody expected. A February federal funding lapse had left TSA screeners unpaid, which resulted in hours of security lines at Atlanta, Chicago, and other major hubs. Oh, wow. Dude, this is such a good article. This pushed travelers toward road trips instead of flying, which is obviously bullish for rental car companies. Wow. Hertz rallied about 65% on the same tailwind, but Avis rallied like 10 times as much. This macro catalyst gave the squeeze a fundamental story to attach to, which pulled in momentum traders who might have otherwise stayed away. Why it is not over yet. The squeeze is still active as of now, and there are structural reasons why it has not unwound yet. The short interest is still very high, and a huge portion of the short shares are yet to be covered. Because SRS is an Avis insider, they are subject to insider trading restrictions and cannot sell until Q1 fiscal year 2026 earnings are released, which are expected around May 6th. Their position is locked until then. Wow. Also, Pentwater is subject to the Section 16 short swing profit rule. This rule is basically freezing their position until roughly late September 2026. They bought shares in February and March, so any sale within 6 months would require them to return the profits to the company. The two biggest holders basically cannot sell, even if they wanted to. If you are long, walk away. I mean, you do whatever you want. This is an article. I don't know. I don't know what to do with something like this. Like I said, I think day trading Avis is probably the best play, but I have no clue. I'm not touching it. I'm a GameStop degenerate, so all in GameStop. If you even bought this stock like 48 hours ago, you are sitting on a huge gain. Right now, CAR is not trading on anything that has to do with the actual business. It is trading on pure short squeeze mechanics and nothing else. I would say take the gains and run. An analyst on Seeking Alpha, Jidus Ziziz, wrote a really good piece about the current fundamentals of the stock. I would suggest reading that to get the complete picture of what you are actually owning at $600 per share. Every single short squeeze in history ends the same way. The stock comes back to reality, AMC, Bed Bath & Beyond, and the 2021 CAR squeeze itself, all of them, GameStop. They didn't mention GameStop, I had to. Bottom line, right now the stock is trading on float mechanics, not fundamentals, and the float mechanics say that more shares are sold short than are available to buy. This is not a stock I would touch on either side. At 600 plus, CAR is neither a sensible long nor a survivable short. But in my opinion, it is the most important market structure case study since the 2008 Volkswagen short squeeze. Yeah, I mean, I agree with that. I think you could day trade it, but it's going to be a tough trade. It's very volatile, but be careful out there. Really good article, though. Shout out to Doug Collins. Really good article. That was awesome. That was awesome. Now we kind of got a little bit of a understanding, a little background on why it's squeezing. And who knows, if they do like an at the money or something, that could be a good stock to watch for the future. Like, I don't think it's obviously it's not a good buy now, but you know, it could be something like GameStop, where if they do correct financial engineering in the future, it could be interesting. Ugh. All right. So it's only one. All right, we got plenty of time. We got plenty of time. Snakes. What's up, Snakes? Hope you're doing good, bro. Hope you're doing good, Snakes. Good to see you. All right, let's get this one. GameStop is laughing all GameStop is laughing all the way to the bank with its new Pokemon card system. GameStop Power Packs allow the retailer to squeeze money from customers without ever handing out a real Pokemon card. Pokemon cards are already worth way more expensive than... alright. Rebate! Rebate! I'm like having a fucking meltdown while I'm trying to read here. Alright. GameStop is laughing all the way to the bank with its new Pokemon card system. GameStop's Power Packs allow the retailer to squeeze money from customers without ever handing out a real Pokemon card. Well, that's not necessarily true. You can get the Pokemon card shipped to you, and it's physical ownership inside the digital PSA vault. So, in my opinion, the PSA vault is like the coolest thing ever. The fact that you can hold your collection in a secure vault and, you know, have them shipped to you at any time, or just have them in there and they're safe. The PSA vault's the coolest thing that has been made in quite a while. Pokemon cards are already way more expensive than MSRP at GameStop, but the retailer still isn't done squeezing out every possible dollar from the collector market frenzy. Since last year, the video game retailer has been selling something called Power Packs, which are small sets of cards compiled by GameStop itself. Earlier in April, GameStop followed up that by launching a digital version of Power Packs, which allows users to buy and trade digital versions of physical cards. So why would someone willingly purchase repack cards, a practice that allows resellers to pocket the most valuable cards while still making a profit from duds? What GameStop is selling is certainty. Packs come in different rarities, denoted in colors such as silver and gold. The cheapest power pack is $25, whereas the rarest packs cost $2,500. Expensive packs hold the best cards, but there's no guarantee that a power pack will contain a good card. There's only a chance at a better card. Like the physical packs, digital power packs allot a random assortment of cards to the user. These digital cards correspond to real-world cards held by PSA, the grading service that is teamed up with GameStop. The physical packs are really cool. They actually just released physical packs, and you can get like a $29,000 Charizard. And the physical power packs are like $150 or something like that. But if you wanted the chance to pull a $30,000 card on digital power packs, you would have to pull the $2,500 cards. So it's actually the physical power packs are actually very interesting from a gambling perspective. Once a player opens a pack online, they can sell or continue storing the cards inside a digital vault. If a card is sold, ownership transfers to the purchaser without necessarily shipping the item to them. It's kind of like owning stocks, except that by some potentially dubious measures, the value of Pokemon cards outperforms the current stock market. Some Pokemon cards. There's a lot of Pokemon cards that are worthless and probably will never go up in value, but, you know. And then there's, sealed product. Sealed product should theoretically always go up in value, but individual cards, there's a lot of variables there. Another selling point for power packs is convenience. Users have the option to either sell cards to other people or sell them back to GameStop for 90% of their estimated value. This buyback program offers less than a user could get from the wider marketplace, but it's also instant. In doing so, users avoid the hassle of writing a listing, taking pictures of the card, and doing marketing to find a buyer. Power pack owners also don't have to worry about the time-consuming process of having their cards verified or graded, as every card has already been evaluated by PSA. Yeah, I think GameStop offers are pretty good when you consider, like on eBay, how much shipping is, how much fees are. GameStop is generally giving you the correct amount. Like if you were to go sell a $30 card on eBay, you'd have to pay 13%, 14% eBay fees, $5, $6 for shipping. So in general, you really wouldn't be getting that much for that $30 card. You'd only get like $20, $18, somewhere around there. So that's probably, the price GameStop would offer you. So it isn't that bad. And then here's an ad for the physical power packs. Yeah, that's the Charizard Hollow, $29,000 for a $150 pack. Like, well, obviously, it's a gamble. You're not going to get that card most likely. But like I said, to pull a card like that in digital power packs is $2,500. So from a gambling perspective, the physical power packs are really cool. And there's a lot of value there, but it is still just gambling. And also, they'll give you a $60 minimum trade credit from whatever you pull in your physical power pack. Plus, you get the 3 booster packs. So no matter what, you're getting about $90 in value. That means GameStop can resell a card multiple times without ever needing to actually distribute a physical card. Yeah, I mean, that's the beauty of power packs right there. The retailer can buy said cards for under market value and pocket the difference, and then go and sell it again. Such a crazy business model. That's awesome. Any desirable card can then be put back into the power pack ecosystem, where a user might purchase multiple packs for a chance at pulling a high value card. GameStop benefits even if users only sell to each other. Every transaction comes with a fee that goes directly to GameStop. These fees are around 6% of the total value, which is reportedly higher than what a customer might be charged had they cut out the intermediary and sold to PSA directly. In an attempt to drum up excitement for and awareness of its gacha-like platform, GameStop is pulling a Willy Wonka. The company teases that one of its mini power packs contain a rare Charizard card with an estimated value of $29,000, but to make a profit, power packs can't be too valuable on the whole, and GameStop can ensure that is the case as the retailer determines what each pack contains. It might sound dubious to some, but power packs are clearly working for GameStop. Even investors are excited about it. Yeah, we still have yet to see how well power packs is actually performing, though. I can't believe these $150 gambling packs flew off our cash wrap, one employee wrote on GameStop subreddit. We sold out. Like, damn. They know that people this is marketed towards have no self-control, another remarked. I mean, I think it's just a good value, and that's why people want it. And also, you could keep the box sealed, and if no one pulls that $29,000 Charizard, those physical power packs could potentially be worth even more in the future. In the event that a customer pulls a genuinely rare card and keeps it, GameStop can still benefit. These users are likely to go online to boast about their pull, and those social media posts might trigger a fear of missing out. Dude, that's a really good point. That is a very good point. So yeah, I mean, even if GameStop loses and someone pulls a super valuable card, they're most likely going to go flex the card, and that is extremely valuable for GameStop. That is such a good point. I've never even thought about that. It is also difficult to tell whether such posts are real. Very, very fair. Very fair. I feel like there's a lot of fake people, fake polls, fake poll posts, a lot of fake stuff, or if users are being paid to post their polls, that too. It does not help that screaming influencers and Twitch streamers who get good cards are being used as promotion by GameStop as well. What are the odds that famous people like Casey Neistat happen to pull great cards while being recorded by GameStop? Good point. It's not impossible, but results among collectors without influencer clout seem more mixed. I mean, I haven't pulled anything good from power packs. So I guess I did pull like a $300-$400 card from the $25 packs, and I've pulled a couple cards that like went up in value after I sold them. So there's a lot of opportunity there, but very good point. One Reddit user says they spent $200 on power packs that included more than double that value in cards. Meanwhile, GameStop also earned hundreds in fees from those same transactions. A less lucky GameStop customer in the same thread claimed that they probably lost $4,000 on power packs and had to block GameStop's website to prevent themselves from burning more cash. That's insane. That's insane. Rather than perceiving GameStop's card scheme as a gambling racket, users with thousands of dollars to spare are giving each other tips on how to approach power pack purchases. No wonder GameStop is going all in on Pokemon cards. I mean, Pokemon cards is amazing right now. You know, whether Pokemon cards will hold their value and continue to be hyped up in the future, I think that's to be determined, but yeah, Pokemon's the business to be in right now, for sure. What a good stream clip. Aw, GameStop's down. Gambling tips. Yeah, it's like D-Lucky, bro. When the thumb goes up! When the thumb goes up! It's just like that! When the thumb goes up, it's just like that. Might need an afternoon coffee. You're red on power packs? Yeah, I think so. I don't think that much, though. Probably like a few $100. Maybe 1,000 at the most. But I've also pulled over 250 cards, so that's not bad. Not bad for the amount of money I've put into it. I'm in and out raking the yard. Pretty sure got a fox living in my yard. Was woken up at 2 a.m. Hearing him cry / screech, probably behind the shed, where I saw a tunnel going under. Oh, interesting. You got a pet fox, dude? That's awesome. I mean, I don't know. I don't know if fox are like pests or anything like that. Maybe you can train it. You can domesticate it. Jimmy's never down, just more affordable. I know, I was just joking. It's not down. I mean, it's down from the high of the day, but it's crushing. It's crushing. I put like $200 in my Roth IRA, but the funds take like 3 days to settle, so I wasn't able to buy, unfortunately. So, whatever. I guess we'll see in 3 days where it's at. It's not like $200 is that much. I have plenty, and I mean, obviously I'd love to have more inside GameStop, but I've got plenty, bro. I've got plenty. Still got my Power Pack Greyfelt Pikachu chase. You are like the luckiest Pokemon puller I've ever met. It's insane. It's actually insane. It's crazy that it's crazy how bad you were at gambling. I mean, gambling slots is tough anyway. I've lost a fuck ton of money gambling slots as well, but your luck on Pokemon is crazy, dude. It's insane. Is streaming your full-time job? I mean, it's the only way I make money, but it's not really my full-time job. I couldn't sit here for 8 hours a day. I mean, I used to sit here for 8 hours a day and stream, but nobody cares about my stream, so I only do like 2 hours now and just post a bunch of stream clips. But it is technically my job, but I don't make enough for it to really matter. I definitely should probably go get like a real job, but this is what I'm focused on. I would say investing / trading is my real job, like where I actually make money. But, you know, the streaming is just gambling, realistically. Like, you know, it's probably less than it's probably like 0.0001% that you could become like a successful streamer and actually like make a living streaming, or, you know, even making YouTube videos. So, you know, it's just a gamble, and, you know, maybe in the future it works out, maybe it doesn't, who knows, but at least I have the investing and the trade. I mean, I haven't placed a trade in like a year or two now, pretty much just buy GameStop, but if it wasn't for that, I don't know if I'd be able to continue to do this. No more packs for me. That's cap. That's cap. I'm selling off most of my collection now. The Zard and Gengar kind of forced my hand. I'd rather keep those two and liquidate most everything else. That's fair. That's fair. That's fair. You're all in though, aren't you, Corey? Yeah. Yeah, I have a lot of shares. I think we're pushing like 11,000. I mean, I shouldn't talk about how much shares I have, but we're pushing 11,000. But it's gotten slow ever since YouTube made it so like people with ad blockers don't count as views, and I also feel like the earnings on YouTube is just down in general. It just hasn't. I mean, I'm just fucked financially, honestly. If it wasn't for GameStop, I'd be fucked. Like, simple as that. Like, sure, I have all these shares, whatever, but I don't want to sell them, so, you know. What's my GME price target? There isn't one. It's hold forever and become a millionaire tax-free. That's the price target. Become a multi-millionaire tax-free by never selling. Because once you sell, you have to pay taxes, and I'm not interested in paying taxes. I'm interested in becoming a multi-millionaire and never paying taxes. People who have price targets don't know how to invest. And they like paying taxes, I'm sure. They must love paying taxes. I mean, if you make $1 million and you're a trader, you have to pay like 400,000 or 500,000 in taxes. If you just make $1 million and as an investor and never sell, you never have to pay taxes. So there's no price target. Today's insane amount of car bag holders got born. I mean, if you're worried about what other people are doing and what they're buying and what they're investing in, I don't know. I don't really care. I'm gonna report on car for the time it has hype, but I don't give a fuck what anyone else is doing with their money. Doesn't matter to me. It's irrelevant. People are always gonna do dumb things, and that's their thing, you know. That's what they're doing. If you're wasting mental space thinking about other people holding the bag on car, you're wasting your mental energy. Straight up. It's a waste of energy. Focus on yourself, my friend. Focus on the things that are valuable to you. Worrying about what other people are doing with their money, that's never going to be valuable to you. Is GME 100% of your port? Yes, sir. All in, baby. All in. GameStop's the only stock I buy. I don't buy anything else. And like I said, I haven't made a trade in like 2 years, so I don't really trade at all anymore. Tax-free millionaire, bro. That's the goal. Tax-free millionaire. You know, whether it happens or not, who knows, but that's the goal. What's my take on Tesla earnings? I feel like only random Elon bullshittery can pump the stock. I mean, I don't think about the market like that, but I don't really have an opinion on Tesla earnings. I just like reviewing it and seeing how they're doing. Like last time they announced they were stopping production on the X and the S. Like that's a pretty interesting piece of news. But as far as how much the stock goes up or down on earnings, that's not what I'm interested in. Tesla's a good business. The stock's just probably overvalued. All those stocks will come back in favor eventually. Like Apple, Microsoft, the top 5-10 stocks. Obviously, Nvidia's at all-time highs. But, you know, that's the main focus of the market right now is semiconductor and AI nonsense. So, you know, eventually other stocks will come back in favor. It's just when, who knows. But earnings, I would never base an opinion on an earnings report. Earnings is just lagging information. You're getting numbers from what they did for the past 3-4 months, and sometimes even further back. Sometimes they're like 6 months behind, so you're just getting lagging numbers. It's not even that valuable. I don't know which one of these I want to read. I kind of want to find another Avis article. The Avis shit's kind of interesting. I think I'm gonna, what time is it? 1:20? Yeah, I'm gonna bookmark all these. And then try to find an Avis article. Want to make another Avis stream clip. Oh wow, it's at 478 now? Holy shit. Damn, down 30% today? That's huge. Once GME hits 90 bucks, you become a millionaire. I mean, not a millionaire. You make a million, but that's... Having a million is not a millionaire, in my opinion. If you're not at like 5, 10 million, you're not a millionaire. I'm sorry. You're just not. If you have $1 million, you're not a millionaire. If you have 5 or 10, all right, you're a millionaire. And hopefully be able to acquire more stock before it goes up that high. If it ever goes up that high, you know. I'm not the type of person to say that that's like a for sure thing. I think there's, you know, I'm pretty confident it will go that high, but I would never say it's like a for sure thing or anything like that. But hopefully can acquire more shares before that happens. A millionaire is an individual whose net worth, total assets minus liabilities equal or exceeds 1 million units of currency. I mean, I don't care about the Google definition or the AI definition. My definition is of a millionaire is someone who has multiple millions of dollars. I don't care what Google says. If you have $1 million, you're not a millionaire. You're just not. You're just not. What's the plan if GME doesn't work out? I don't know. We'll find out. That's a long time. 5, 10, 20 years. We'll see. I don't know. That's not even a thought. It's not even a thought. I don't have plan B, bro. If you have a plan B, you don't believe in plan A. I don't believe in plan B. I just impregnate chicks. I don't believe in plan B. I just nut inside. No plan B, bro. I'm sorry. I'm sorry. I thought that was funny, but I don't think anyone else thought that was funny. Oh, is this the article I wanted to read? I think it is this one. It's basically just repeating what we read in the Seeking Alpha article, though. It looks like. But I'm cool with that. Yeah, I already impregnated Ryan Cohen, bro. There's no going back. I can't put plan B in his eggs. How am I paying my bills? Covered calls? Just doing it, bro. Just doing it. Just doing it. I mean, I don't really pay bills, to be fair. I'm just a stock manager, bro. Well, I just manage my family stock account. They do all the bill shit. I'm just a lazy stock guy. I don't necessarily have to worry about that, which is nice. Interrogation? I know, bro. This guy's watching my pockets, bro. He's trying to watch my pockets. Pocket watching. All right. Yeah, like, if we're being straight up, my mom's gonna be a multimillionaire before I am. It's like, if that's what you really want to know, my mom's gonna be a multimillionaire before me. So, there you go. And then I don't know if anyone else in my family buys GameStop, but I'm not sure. My friends shame me for still living with my parents while most of their paychecks go to expenses. I don't think there's anything wrong with living with your parents, bro. Like, your parents are gonna die one day. Like, you should spend as much time as possible with them. And, you know, also from a financial perspective, you know, it's cheap to live. It's cheap when you have other people to live with. So, I don't think there's any shame in that. You know, I've had so many family members pass away in my life that I wish I would have spent more time with. Or, you know, maybe I was too young to even realize that, but yeah, I mean, you got to spend as much time as you can, bro, because one day they'll be gone and you'll regret not spending as much time. You know, I think. You know, so there's the financial aspect, but there's also, you know, when you're 50, 60, 70 years old and most of your family's dead. I mean, this is some dark shit. I'm sorry. I'm getting pretty dark here, but when you're like 50, 60 years old and your whole family's dead, you're going to be like, fuck, man. I wish I would have spent more time. Maybe, you know, I feel like that's how I would feel, but maybe you're not the same way. But I think that's a reality. I think that's reality, bro. Too dark, about to shed a tear. Nah, don't shed a tear, bro. Bruh, go read a happy article now. We had to get dark, bro. That's reality, bro. Reality is dark. I'm gonna go hug my mom. Do it, bro. Do it. Go give her a phone. Go. You know what? Everyone in the chat, go call your mom or your dad or someone. Go call someone. Tell them you love them. That's my financial advice. You guys want financial advice? Call your parents or your siblings or something. Give them a call. Give them a ring-a-ding-ding and say what's up. I'm gonna go call my dad for the first time in 6 years. There you go, bro. Do it. I know you're probably joking, but you should do it. It would be a good idea. Alright, I'll read this article now. I'll read the article now. We don't have much time. What is powering the Avis... What is powering the Avis short squeeze inside the math of a supply-demand crisis? Key points. Avis Budget Group stock surged 23% to a record 608.80 on Monday, marking a more than five-fold gain in the past month. A short squeeze compared to GameStop and Volkswagen is driven by two investors holding 71% of shares and 107% with swaps. Barclay analyst Dan Levi called the stock's move all technical, citing a sharp supply-demand mismatch and high valuation. One of the wildest short squeezes of recent years continues to play out in shares of Avis Budget Group, as the stock of the rental car company rose about 23% Monday to a record high, capping a more than five-fold gain over the past month. Avis rose $115 a share, or 23%, to 608.8 on Monday. The stock traded at around $100 on March 20th. Shares continue to climb Tuesday, up 11% in pre-market trading. The squeeze is evoking comparison to historic short squeezes in the past, including GameStop in 2021 and Volkswagen in 2008. A short squeeze occurs when a stock rallies and it forces short sellers to buy back or cover their shares. That buying propels the stock even higher. Bullish investors also may pile into the stock and try to force the shorts to cover. Avis is subject to a squeeze because two investors, SRS Investment Management and Pentwater Capital Management, own about 71% of the company's shares. SRS owns 17.4 million shares and Pentwater 7.8 million shares as of March 25th, according to the Avis proxy dated April 2nd. Avis has 35 million shares outstanding. That is squeezing short sellers. The short interest in the stock was 9 million shares as of March 31st, and the latest date of which information is available according to Bloomberg. These two big investors also own cash-settled equity swaps that push their combined ownership above 100%. SRS held 2.9 million shares via swaps, and Pentwater 10.2 million shares, the Avis proxy states. The combined stake of the two investors, including swaps, is 107% of the shares outstanding. Barron's calculates it's rare for two investors to effectively own more than 100% of stock outstanding of a company. SRS is headed by Jagdeep Pawar, who is also Avis's executive chairman, and Florida-based Pentwater is led by Matthew Halbauer. Barclays analyst Dan Levi cut his rating on the stock to underweight from equal weight in a note early Monday, but raised his price target to $150 from $95. In a client note, he called the stock move all technical. The company now trades for a rich valuation of more than 150 times projected 2026 earnings of nearly $4 a share and over 30 times projected 2026 EBITDA of about $800 million. Avis is now valued at $21 billion, and it has $6 billion of corporate debt. It also has about $19 billion of debt tied to its rental car fleet. At its core, the move is a function of a sharp supply-demand mismatch in its stock, with two holders accounting for 71% outright ownership of the company and over 100% of economic interest given outstanding swaps on car stock, Levi wrote. And with the short interest now at nearly 100% of the float, yet with brokers accounting for much of the float due to the swaps, and likely to need to continue holding the stock to hedge against the swaps, a sharp short squeeze has been the result, reminding many of the short squeezes faced by Gamestop 2021 and VW 2008. The Wall Street swap counterparties of SRS and Pentwater could be getting squeezed as the stock surges as they seek to adjust their hedge positions, as well as those short for fundamental reasons. Avis is one of three companies that dominates the U.S. rental car market. The others are the privately held Enterprise and Hertz Global Holdings. Avis has been subject to short squeezes in the past, including one in November 2021 when the stock doubled in a single session to $332 and topped $500 on an intraday basis before declining. Avis could take advantage of the run-up in the stock to sell shares. The company filed in late February to issue up to 5 million shares through a group of Wall Street sales agents at prevailing market prices. Barron's isn't aware of any sales under the program. Yeah, I don't know if they did or not. The stock is down a ton today. It's down, last time I looked, it was down like 30%. Yeah, still down 35%. Went from $850 at the top of today and is now trading at $465. So I don't know if they did an at the money or anything like that, but yeah, I mean, we'll see if this continues to go. A key issue is whether the run-up will prompt SRS or Pentwater to sell some of their shares to capitalize on huge recent gains. And if you listen to the Seeking Alpha article, they actually can't sell until, I think Pentwater can't sell till September 2026, and SRS can't sell till, maybe SRS can sell, but one of them can't sell until September 2026. Deutsche Bank analyst Chris Waronka addressed this in a client note earlier this month and said sales are unlikely soon. Because SRS is considered an insider, given its ownership position and the fact it has 2 representatives on CAR's board, it likely cannot sell any shares during CAR's current quiet period, ahead of the release of Q1 results in late April or early May. We also note that SRS has only sold shares in CAR once since initially accumulating its stake, that being the sale of 1 million shares or 5% of total to CAR, which is used a share repurchase authorization to buy these shares back in August 2023. Meanwhile, we believe the short swing rule, Section 16B of the Securities Exchange Act of 1934, requires that insiders, i.e. any owner of more than 10% of the shares outstanding, must return to the issuer any profits made from buying or selling the stock within 6 months of the most recent trade. Based on our interpretation of that provision, it's unlikely that Pentwater sells any CAR stock before at least September 20th, he wrote. Avis doesn't appear to have a set date for its first quarter earnings release. And I think their earnings will be pretty interesting, but I'm curious to see how this stock is going to continue to perform. It's wild that it literally hit $850 today and now it's trading at $465. Like that's just crazy volatility in one day. You just really don't see that. And the stock has just been absolutely ripping. So, I wonder if it's going to pop back up and anyone who's shorting it's going to get absolutely wrecked, or maybe the short squeeze is over at this point. It definitely could be. I'm talking about it pretty late. It didn't really catch my attention until later on. It's still very early potentially, but I don't know, man. I potentially am very late to reporting on this, but like I've said in the Seeking Alpha article video, I would never buy or sell this. If you're day trading Avis, I think there's some opportunity there, but positioning in Avis, man, that's going to be a tough trade, a very tough trade. Even day trading, it's going to be tough, but trying to swing trade Avis, that is going to be extremely tough. All right, there we go. That was a decent one. I liked that. This thing getting clapped, though. That's huge. Huge sell-off. Concerns over potential equity offering and unsustainable short squeeze. Yeah, so they didn't even do an at-the-money offering. That's crazy. Why wouldn't they do an at-the-money offering? You could have did the full 5 million shares at $800 and raised $4 billion. Why didn't they do that? Makes no sense why they didn't do that. If the stock was going to drop that much anyway, like, who cares? Send it back to $100. All right, I guess we'll get ready for Tesla. I guess. I think Tesla does their earnings report on YouTube, if I'm not mistaken. They have a weird investor relation website. Tesla. Bottle water. LaCroix. LaCroix. Tesla. Oh, they have a whole like Q&A thing here. That's kind of cool. LaCroix. LaCroix. I think they're. Where's a press release? Maybe no. What's up, AA Rome? How you doing, bro? How you doing? It's got to be on. It's got to be on their YouTube channel, I would imagine. No. Apparently I don't know. A lot of people streaming Tesla earnings. How come I can't find their earnings call? Doesn't really make any sense. Oh, let's see. Right here. Wait, what? I guess we'll have to wait till it releases for that. So whatever. Whatever. It's crazy how there's 25 people here, but the chat is just completely dead. Very odd. Very odd. I guess I could read another article or something. Let's see what they got on Reddit. Probably nothing. I saw a post on here. Like, what? Super Stonk is just like full of fucking pussies right now, dude. I saw some dude like crying about how the stock's not moving, and then I go down in the comments and there's a bunch of people crying in the comments. Like, there's all the people crying about how the stock market's at all-time highs. People crying that GameStop's not squeezing with Avis. Like, God, a lot of little babies, bro. A lot of little babies in Super Stonk lately. I mean, it's probably mostly bots, but if it's not bots, bro, there's just a bunch of little babies in this fucking Reddit. Wah, my stock's not going up. Wah. I'll try to find another Avis article, I guess. I've got a lot of GameStop articles ready to be uploaded. Another Avis one would be nice. At least, you know. Unless it's over, you know, Avis could be done. Definitely could be done. That's a paid article. I don't want that. What's this one? I think Wall Street Journal articles are paywalled. Yep. Pretty much all these are going to be paywalled. All the ones I probably want to read. This has to be a long one because I just don't have much to say about this. A lot of people shorting Avis though, so pretty interesting. Do I know why GME's up today? Because the stock's bullish, I would assume. I don't relate news to price action, so people are slowly starting to get it, maybe. I don't know. It's just another day, you know? It's up today, it'll probably be down tomorrow. Same shit we've been going through the past 2 years now, or I mean, some of you guys have been in this stock for like 6 years, so. But that's the stock market. Goes up, goes down. You can try to, you know, put whatever news article or whatever you want to try to like justify why it's up or down, but the reality is it's, you know, market structure. Simple support and resistance. And the stock's bullish, so in general it should be up over time. But one of these days it'll be down. And then, you know, you'll be wondering why it's down, but it's just probably hit a resistance level and people are shorting it, and then, you know, who knows how long that'll last. A lot of things. I don't really pay attention to it, to be fair. Like I think paying attention to that like type of analysis is pointless. Like the only thing that matters is making money. So, you know, if you're gonna make a trade on it, that's all that matters. You have to know your risk and what you're gonna take for profits and all that. And that's, you know, day traders generally control the majority of price action. So if you can think like a day trader, I think it'll make the stock market will make a lot more sense. But if you think like news and stuff like that is what drives the market, I think it's going to be tough to. I think it's going to be tough to try to get like an understanding of the market. To me, news is irrelevant. Opinions are irrelevant. Most things are irrelevant. Technical analysis is irrelevant. Like, think like a trader, you know? Think like a trader. Power Pack should have real estate polls. Pull a 60K land card and you get 3 acres on a river in Oklahoma. That's actually pretty funny, but real estate, gross. Don't make me go on another real estate rant, please. Don't make me go on another real estate rant. Or cars, pull a Porsche. I think the issue with those things is they lose value over time. I think what makes power packs interesting is cards generally go up in value and they don't really lose value. Certain cards are pretty volatile, but in general, I would say, you know, most cards don't really lose or gain value and really only gain. And as PSA increases the prices to grade cards, you know, they should just gain value. You know, I think that's what makes power packs interesting. If they were offering something like real estate or cars that only loses value, I don't think that would be interesting. What's up, Ruben? Been a while, Ruben. Hope you're good, bro. Hope you're good. Has GMA sideways action ever led you to consider covered calls? Oh, of course, but I don't have enough shares to. I mean, I have a lot of shares, but like, I'm not willing. I'm not willing to sell a covered call because the slight chance that I have to sell my shares at whatever strike price, it's just not something that interests me. If I had like 20, 30,000 shares, you know, maybe I would consider it more. I probably would actively more sell covered calls if I had a lot more shares. If I had like double the shares I had now, I probably would consider it because it is a good income source. But where I'm at right now, you know, it would be nice to have the extra income, of course, but it's just not. I'm not willing to take that risk. You know. And you can sell a covered call anytime. I'm more interested on the long term valuation, the long term what am I trying to say here? Whatever. Like, income's cool, but I mean, think about it this way. If you would have sold a covered call when you hit $24, $25, 24, we'll say, you would have made. I mean, it depends what one you do, but if you would have sold a monthly option, that's $100. I mean, GameStop's trading at $25 now, so you made your $100 anyway. So like, sure, you could sell covered calls, but you could essentially get the same outcome trading the shares. So, and I'm more interested in, you know, the future. Like, if GameStop, you know, obviously we all here believe that GameStop's going to work out, but I'll never say that it's a for sure thing. So if GameStop works out and you start trading at $50, $100, $200, you know, instead of getting $100 for a monthly option, maybe you'll potentially be able to get like $300 or $400 for a monthly option. So also the income in the future is a lot more interesting as well. And if the stock ever like goes up a ton, you know, if the stock ever like, obviously I also don't think the stock's going to squeeze, but if the stock ever squeezes, you know, those options are going to get so overvalued, and that's going to be the moment when you want to sell a covered call or something like that. So, but it's all you know, it's all based on your financial situation. Like, I'm pretty lucky. I don't really have to worry about too much, but if there comes a time where I need income, sure, you know, I'll probably sell a covered call or something. Like, I don't know. Who knows? But just in the moment right now, I don't necessarily feel like I have to do it. Like, I would only sell a covered call if I felt like I had to do it, or, you know, sell shares if I felt like I had to do it. As long as I'm doing okay, and like, I don't need to go buy anything nice or anything like that, so I'm good. But who knows, you know, a couple of years down the road, maybe I might need it. Like, you never know. I'd rather, you know, I'd rather wait to see what the future holds, but I'd also rather wait for a moment when I actually need it. It's funny seeing $12 slabs now when it costs $30 to grade the card now. Yeah, that shit's crazy. Like I wonder if those I wonder if those cheaper slabs will ever grow in value. Did Corey do Lambo? Nah, I haven't played Lambo season today. Today's Tesla earnings, yeah. What's up, Kenny? Jimmy boy coming back strong. Nice. Nice. Hopefully it hits a high a day. Oh shit, it is at a high a day. Let's go. And also there's been a lot of people shorting it at like 25.30. You've had multiple rejections on 25.30 the past few trading day or the past couple trading days. So you're trading above anyone who's shorted those areas, and you're about to close above those areas as well. That's pretty tight. From a short term, trade perspective, because April 16th they shorted 25.37, pushed it down. April 21st they shorted 25.30 again, pushed it down. And look at what we talked about. They pushed it down to 420 on April 16th. They tried to do the same thing, but we're only able to push it down to 24.50 this time. So the shorts got weaker and weaker, and now you're trading above anyone who shorted. Yeah, that's short-term price action. The stock could eventually come back down and fill this gap here at like 23, whatever. Like, that's a possibility, but from a short-term price action perspective, this looks great. That looks great. And I guess back in February, you also hit this price. You're at the price you sold off in February, and you sold off to $23. So if you're able to start trading this price and holding, that's extremely valuable. And we got some interesting price action on our hands. Some interesting price action. Lambo at close. Maybe when it's up more. Maybe we'll play some Lambo season. Maybe we'll wait. We'll wait. We'll wait. We'll wait. About 4 minutes till the market closes. I was going to try to find an article to read, but I couldn't find anything that stood out. So I'll try to look for more. I mean, who knows? The Avis thing could be done. Short squeezes generally don't last that long. So the Avis hype could be gone. But I don't really care what happens to Avis, but I do hope it pops again, because I want to be able to report on that more before it loses its hype. I want to try to make like 3 stream clips a day. That would be tight. Literally everything they say against GameStop is done intentionally. They know the truth, but the lies are preventative against any current or new investors to try to get them out. They are bought and paid for liars on purpose to deter against GME investments. I don't necessarily agree with that. I think people are just reporting on the information they have, and maybe they haven't done the research to promote the correct story. You can think about it however you want. I don't know why everyone's such a doomer though. Like, you should just be happy you're in the investment. Like, you shouldn't worry about other people. A lot of the GameStop articles we've read recently are actually pretty good. So you're saying that they're writing good articles intentionally? Like, I don't know, bro. Then the Jacuz homies wrote a couple comments, and he's always talking about how the markets shouldn't be up because of macro factors. Like, bro, the stock market and economics really have no correlation. They have some correlation, but the stock market is its own entity. Doesn't matter if you think economics are bad, or even if economics are bad, the market can still push higher and higher prices. There's so much money out there, bro. If you don't think if you think just because there's a war in Iran and you think the economics are bad in the world and the stock market shouldn't be at all-time highs, you're completely ignoring the fact of how much money is out there, bro. There is so much money out there. It's actually insane. It's actually insane how much money's out there. Everyone's just doomer as fuck, though. I mean, I'm a doomer. You know, I'm the biggest hater. But when the stock market hits at all-time highs and you're like bearish on it, you can be a hater all you want, but you're just ignoring reality. If the stock market was bearish, it wouldn't be at all-time highs right now. That's a simple... Any beginner trader who understands what bearish and bullish is: higher highs, higher lows, bullish, lower lows, lower highs, bearish. Like, that's as simple as it gets. That's literally that's the stock market. Like, I don't know, man. I don't know. And they haven't turned on the printer yet. I mean, that's never gonna happen again. It's most likely never gonna happen again. Maybe like 20 years from now, you'll see another event like that, but I don't think you'll ever see that ever again. Straight up. That was a one-time thing. Gonna be a new subreddit, super car stock. Well, our Tesla number's out. It's doing something. It's doing something. I don't know if the numbers are out yet, though. They haven't released them on the website. I don't know, bro. People's opinions are just so, like, driven on emotion and misinformation. It's just hard to get behind a lot of people. Like, my opinions and the things I talk about they're just real. Like, I don't get emotional. Like, I'm not that guy. I used to, you know, when I was a beginner trader. That's why I talk so much trash, or I don't really talk trash, but like, that's why I talk so much about beginner traders. Like, when people come in here talking about gambling on earnings and doing like certain things, you know, that's why I say so much about beginner traders, because when I was a beginner trader, you know, those were the things I focused on. But once you get seasoned and you see the market for what it is, and you just like accept reality and ignore everything else, it's a good place to be. It's a good place to be. All right, so Tesla first quarter 2026 production, deliveries, and deployments. In the first quarter, we produced over 408,000 vehicles, delivered over 358,000 vehicles, and deployed 8.8 gigawatts of energy storage products. Thank you to all our customers, employees, suppliers, shareholders, and supporters who helped us achieve these results. So the Model 3 and Y, they produced 394,611 and delivered 341,893. Other models, 13,775 and delivered 16,130. Pretty interesting. Where's their numbers though? Oh shit, we gotta do a stream clip. We gotta do a stream clip, chat. It's ripping. Oh no, why did I short Tesla, dude? This happens every time, man. Every time I short, the stock goes up. Every time I buy, the stock goes down. How much money can I lose, dude? I just keep losing. I actually wanted to do one where I said I was the best trader ever. I think that would be funny, but I think that would be funny. But we'll do it when something's up massive. 4%, nothing. Nothing. I don't even know what I said. I don't even know what I said. What did I even say? Oh no, why did I short Tesla, dude? This happens every time, man. Every time I short, the stock goes up. So stupid, bro. So stupid. Funny but stupid. Funny but stupid. Dude, I just keep losing. Oh, I guess I should, wait, is this the same press release? Oh, do they not, like... I'm so confused by that. Do they not post their numbers? Very odd. Very odd. Oh no, why did I short Tesla, dude? This happens every time, man. Every time I short, the stock goes up. Every time I buy, the stock goes down. How much money can I lose, dude? I just keep losing. It's so stupid, bro. It's so stupid. Oh, it's so dumb. Tesla doing the meme. Caught the bottom for real, for real. For real, real. The real, real. What did Gamestop end up closing at? Oh, a Papa Meat video? That's awesome. Gotta love Papa Meat. Okay. Got that ready. 2566? Damn. That's pretty impressive. I feel like that's pretty impressive. I thought it was a failing business, though. What happened? Failing business. It was going to go back to 20. It was going to go back to 14. It's going to go back to 18. Easy trade. Between 24 and 20. Easy trade. What happened to all the people with loud fingers? There were so many loud fingers like a couple months ago. What happened? Fucking silly, bro. People's opinions are silly. Like I was saying, bro, most people's opinions are based purely on emotion. They don't even think. They don't even think, chat. They don't even think. Next time you have like a disagreement with someone, you know, stop and be like, when was the last time this person actually thought about this subject? Is their opinion based on emotion, or have they actually thought about the subject? I think you'll find that most people's opinions are based on emotion. That's, you know, my experience. Oh yeah, chat. I'm going to a fucking Chris Webby. Going to Chris Webby tonight, chat. I don't think anyone here listens to Chris Webby. You know, it's really weird. Like, none of you guys like the things I like, but you still listen to me. That's so weird, bro. Like, none of you listen to Chris Webby. None of you watch wrestling. None of you watch Kill Tony. You guys, like, don't like the things I like, but you still listen to me. It's so weird. You guys probably just like seeing me make a fool of myself on the daily, huh? Or you're just hoping I lose on this GameStop trade. Well, that's not gonna happen. If you're watching to see if I lose on the GameStop trade, I mean, it's not a good reason to watch, because that's most likely not gonna happen. It'd be funny. You know, it'd be funny. But it's probably not gonna happen. I never lose. You know that Nipsey Hussle song? You know, this is my theme song. I don't know if you guys know this. I have a theme song. It's not Lambo Season either. Lambo Season's just one of them. But this is the true theme song right here. This is the true theme song right here.
Play solo.
Yeah, War the Warships.
At your own pace.
That's the theme song right there. World of Warships. Nah, this is the theme song right here. Fire song. Fire song. Unfortunately, I can't listen to it on stream, but it's a good song. You know a song we can listen to on stream, though? You know a song we can listen to on stream? I'll be right back.
Push start, then I go. Man, this Lambo season. If you're moving too slow, probably would never see me. If I tell you about everything that I've been through, probably wouldn't believe me. Bounce back from all that shit and I always make it look easy. Sometimes the money get to the pride. Other times money don't make it to your side. Get it, then we spend it like it wasn't ours. Cause you can't take it home with you when you die. Live fast, die broke, only you decide. Outside lights off, unsupervised. Bad wings when the doors go suicide. I ain't ever been this high. Bloodshot red in my eyes. Please don't fuck up my vibe. Floating through space and time. Colors coming out of my mind. I ain't ever been this high. Push start, then I go. In this Lambo season. If you're moving too slow, probably wouldn't ever see me. If I told you about everything that I've been through, probably wouldn't believe me. Bounce back from all that shit and I always make it look easy. But still wasn't none of this easy. Let me in the cold, they ain't need me. It's funny cause I ended up freezing. The diamonds all recent. Pastor probably think I need Jesus. I just need a new account of regions. Lambo season. I ain't on my side, I'm anemic. The hard times made me uneasy. Came out the city, but it feel like the city ain't leave me. Till my heart stop beating. I ain't ever been this high. Bloodshot red in my eyes. Please don't fuck up my vibe. Floating through space and time. Colors coming out of my mind. I ain't ever been this high. Push start, then I go. In this Lambo season. If you're moving too slow, probably wouldn't ever see me. If I told you about everything that I've been through, probably wouldn't believe me. Bounce back from all that shit and I always make it look easy.
Oh yeah, baby. Oh yeah. Lambo season. I love how everyone leaves when I play that song. I love how everyone leaves whenever I play that. That shit's funny. That shit makes me laugh. How much did car go down today? 38%? Holy guacamole. Holy guacamole. That's insane, dude. That's an insane trade for the day. That's an insane trade. Push start, then I go. And it's Lambo season. I should have said Tesla season. Push start, then I go. And it's Tesla season. Nah, Tesla season. Tesla season? Nah, bro. You want that Lambo. You want that Lambo. You want that Lambo. Still got an hour until the fucking Tesla earnings call starts. It's a joke. Push start, then I go. And it's Lambo season. Do they have like anything else to read or anything like that? They got all their numbers. That's nice. Let's see. Manufacturing hardware, automotive. We're focused on optimizing our vehicle product portfolio with an emphasis on vehicles designed for a fully autonomous future. We continued the launch of the Model 3 and Model Y trims globally, including the rollout of the Model YL in the markets outside of China, and more affordable trims of both models. We also began deliveries of Cybertruck in the UAE. We expect volume production of both Cybercab and Tesla Semi this year. Oh wow, they're finally getting on the Cybercab and finally getting on the Tesla Semi. That was announced a long time ago. Energy generation and storage. Progress continued at the new Mega Factory outside of Houston, which will produce the Mega Pack 3 for Mega Block. Start of production is on track for later this year. We began meaningful customer deployments of Tesla's first in-house designed solar panel produced at Gigafactory New York. The new panel has 18 individual power zones, 3x more than a conventional residential panel, enabling it to reliably produce more energy in shady conditions. Other innovations include improved aesthetics and faster and simpler installation. Robotics. Preparations for our first large-scale Optimus factory will begin shortly in Q2. The first generation line, designed for 1 million robots a year, will replace the Model S and X lines in Fremont. We are also preparing Gigafactory Texas for the second generation line, which is being designed for long-term annual production capacity of 10 million robots. Wow. Robots are going to be interesting, man. Robots are going to be interesting. I'll buy one. I'll buy a robot. You think I'm a robot? I'm going to name it Mr. Krabs. AI training compute. Cortex 2 is now online and has started running training workloads. We continue to ramp our on-site training infrastructure to ensure sufficient compute resources for the development of our AI products and services. We're also continuing our custom silicon development with Dojo 3 in an effort to reduce the cost of training over time. Battery. Ramp has begun across our new battery and material factories, including LFP cells in Nevada, cathode material and lithium refining in Texas. Battery pack capacity continues to be the limiting factor on ramping our vehicle production, and the team is actively working on initiatives to increase capacity. Other supporting infrastructure. Gigafactory New York is now producing V4 supercharging cabinets, which boast 3x the power density and 2x the number of stalls per cabinet compared to V3. Alongside the ramp of Tesla Semi, we're deploying public megachargers, including our first one in Southern California. Megachargers? I've never heard of that. While we aim to leverage as much of our existing investment as possible, we continue to build out our supporting infrastructure for our vehicle and mobility businesses, including robotaxi expansion across established and growth markets around the world. In Q1, we added over 2,200 net new supercharging stalls, growing the network 19% year over year. This year, we look to increase our presence in Japan by doubling our service centers and expanding supercharger coverage in the world's third largest vehicle market. AI and software. AI software. Our latest version of SSD, supervised v14.3, launched in April. We upgraded the reinforcement learning stage of training to better handle long-tail edge cases, enhanced the neural network vision encoder for sharper perception in low visibility scenarios, and rewrote the AI compiler to accelerate model iterations, as well as runtime to cut inference latency by up to 20%. These architectural advances will help accelerate our efforts to eventually deploy unsupervised autonomy on both the robotaxi fleet and customer-owned vehicles. Digital Optimus represents the next evolution of our AI development. We are working on automating digital workloads, building an intelligence layer that will complement the real-world AI we have built to operate vehicles and humanoid robots. I was watching some weird movie at the gym yesterday. It was like Free Guy or something like that. It's a Ryan Reynolds movie. It's about like this video game where he's like an AI, he's an NPC in the video game, but he's like evolving. It's such a weird, I didn't get to watch all of it, unfortunately, but it looked like a very interesting concept. I don't know why that made me think of that, but it was pretty interesting. I saw that one. Yeah, it looks good. Like I said, I only watched like maybe the first like 20, 30 minutes, but it looked really good. AI inference compute. Coinciding with robotaxi and Optimus ramps, we are expanding our scope of manufacturing to include semiconductor fabrication, an important step to ensure sufficient and resilient chip supply. Our partnership with SpaceX aims to build the largest chip fab ever, vertically integrating logic, memory, and advanced packaging to allow for rapid iterations as we anticipate greater chip demand than what existing and planned industry capacity can accommodate. This begins with the Tesla-owned research fab on our Gigafactory Texas campus. In April, we completed the final chip design of our next-generation A15 inference processor. like this is the whole point I was trying to make earlier when that dude was like, I forget who it was. Someone was talking about Tesla price action or something like that, and like I don't care about what Tesla. I don't care if Tesla goes up or down. Like I just like reading this stuff. Like it's very interesting just to see what a company like this is actually doing and getting like a real perspective on what this company does and what the future is going to look like, instead of just being like, oh, the stock chart's down, Tesla's trash. It's like, yeah, that's, I think it's better to be educated than just be looking at charts going up and down on a screen, or numbers going up and down on a screen. Automotive and other software. In April, we began rolling out our spring update, which includes a new in-vehicle self-driving app, A14 Vehicles. Users can subscribe to FSD, learn how to use the feature, and view ongoing stats. Customers can launch Grok by saying, "Hey Grok," and set location-based reminders. Ascent lights can now turn red when an object is in your blind spot and your turn signal is engaged. Pet mode allows users to name their pet and choose between dog, cat, and hedgehog. What? What? Services, Robotaxi. In Q1, paid Robotaxi miles nearly doubled sequentially. Once in production, we expect that Cybercab will begin to replace the existing Model Y fleet and will be the largest volume vehicle in the fleet over time. I want to get a Cybercab, bro. I don't want to ever drive again. I want the Cybercab to just take me everywhere. We continued laying the groundwork for expansion of our Robotaxi service to additional major U.S. metros, including testing and permitting, allowing us to quickly launch new markets once we are ready. Our top priority remains safety. We further expanded our unsupervised operation area in Austin and launched unsupervised rides in both Dallas and Houston in April. Software is getting turbo-wrecked. AI Gen Now and IBM are dying. Well, IBM also had earnings today, so. And I'm sure whatever the other one is also had earnings. You can't really base an opinion off of a stock moving off of an earnings report. Like sure, like are they dying or are they just going down because of a bad earnings report, or maybe the stock's overvalued and they had a good earnings report? I don't know. I would never say a stock's dying just because it's down on earnings. Oh, ServiceNow. I think both of those are decent businesses. The stock's probably just overvalued. FSD supervised. We began moving FSD supervised to subscription only. Adoption, attachment to new purchases, and penetration, total users among the eligible fleet, both continue to grow with record net new subscriptions in Q1. Wow, I can't believe people are actually still paying now that it's a subscription model. That's like the reason why I don't want a Tesla, is because FSD is a subscription model now. I think that sucks. But it's growing apparently. A major focus is increasing awareness of the safety and convenience provided by FSD as we evolve our sales strategy to position FSD as the product with promising early signs as the product. We received approval to deploy FSD in the Netherlands in April, which clears the path for potential approval in other EU countries. We continue to make progress on approval in China. Automotive services. We continue to invest in ancillary services to increase the convenience for our customers while lowering total cost of ownership. With the continued rapid progress on FSD, the latest version of Safety Score enables every mile driven with FSD to receive a score of 100, enabling Tesla insurance customers to maintain a higher safety score over time, resulting in lower monthly insurance premiums. The reduction in premiums in certain cases can more than compensate for the monthly price of FSD. Now that's pretty interesting. How much is FSD? Tesla FSD subscription. How much is it? $100 a month? Jeez. can subscribe to, let's see, enhanced autopilot. Owners who previously purchased enhanced autopilot can subscribe at a reduced rate. That's quite a bit, man. $100 a month. I feel like that's quite a bit. All right, outlook, volume. We are focused on maximum capacity utilization in our factories. Deliveries and deployments will be impacted by aggregate demand for our products, supply chain readiness, and allocation decisions between sale to customers or use for our owned and operated fleet. Cash. We will manage the businesses such that we ensure a strong balance sheet, maintaining sufficient liquidity to fund our product roadmap, long-term capacity expansion plans, including further vertical integration and other expenses. Profit. While we continue to execute on innovation to reduce the cost of manufacturing and operations, over time, we expect our hardware-related profits to be accompanied by an acceleration of AI, software, and fleet-based profits. Product. We continue to evolve and augment our product lineup with a focus on cost, scale, and future monetization opportunities via services powered by our AI software. We remain focused on growing our sales volume through a differentiated and efficiency-managed product portfolio, which includes leveraging and optimizing our existing production capacity before building new factories and production lines. Cybercab, Tesla Semi, and Megapack 3 are on schedule for volume production starting in 2026. First-generation production lines for Optimus are being installed in anticipation of volume production. Capacity build-out and ramp related to our multi-year infrastructure initiatives, including AI compute, solar battery material, and semiconductor manufacturing are on the way. Photos and charts. Building construction at Gigafactory, Texas. Jeez. AI training cluster. This is kind of cool that they have all the photos of the stuff they're doing. This is kind of cool. Body in white line. Production line for the Tesla Semi. Optimus factory site preparation. Research fab groundbreaking. First production models for LFP factory. Cybercab team started production at the Gigafactory, Texas. Now, this is cool. This is really cool. Cybercab team started production at Gigafactory, Texas. Oh, just another one. Key metrics. So their vehicle deliveries are down a little bit, but they're not down like crazy. Free cash flows flat, basically. Same with operating cash flow. Net income's down, though. That's pretty interesting. Their adjusted EBITDA's still up quite a bit, but still down. But yeah, well, interesting. Net income is down the most it's been since Q1 2025. Oh, I guess Q1's just isn't the greatest for them, it seems like. Okay. Wait, what is that? Is that quarterly? Oh, yeah, that's quarterly. Okay, so trailing 12 months. Yeah, vehicle deliveries are flat. Operating cash flow almost hit an all-time high. Free cash flow is almost at an all-time high as well, actually, if you're looking at 12 months. Okay, it's just the quarterly. Okay. Yeah, but their net income is still down. Adjusted EBITDA's up, but their net income's still down. Let's see. Revenue. Total quarterly revenue increased 16% year over year to $22.4 billion. Revenue was impacted by the following items. Positive increase in vehicle deliveries, growth in services and other, positive Forex impact, higher vehicle average selling price, higher automotive ancillary sales, primarily driven by an increase in FSD sales and subscriptions. And then the negatives, lower energy generation and storage revenue, lower regulatory credit revenue. Profitability. Our quarterly operating income increased 136% year over year to $0.9 billion, resulting in a 4.2% operating margin year over year. Operating income was primarily impacted by the following items. Positive increase in automotive one-time benefits related to warranty and tariffs, growth in services and other gross profit, higher vehicle average selling price, increase in energy one-time benefits related to tariffs, positive Forex impact, higher automotive ancillary sales primarily driven by FSD and subscriptions, lower average cost per vehicle due to lower material costs, increases in vehicle deliveries. And then the negatives, increase in operating expenses driven by AI and other R&D projects, 2025 CEO award, SBC and SG&A, lower regulatory credit revenue. And then cash, quarter-end cash equivalents, and short-term investments was $44.7 billion. The sequential increase of $0.7 billion was primarily the result of $1.4 billion free cash flow and $1.2 billion financing inflow, partly offset by $2 billion for the SpaceX equity investment. And then here's all their numbers, which I don't really want to go through. Okay. Pretty interesting. Pretty interesting. We still got an hour? No. No. Ugh. I was hoping I would kill more time than that. We still got an hour. Chat. Not good, chat. No good, chat. I guess we can look at IBM and ServiceNow. See what dying looks like. Down 7%. Our definition of dying must be different. Although IBM doesn't look that great. I think our definition of dying is very different. But ServiceNow, that's down a lot. That's down a lot. That's a big move. That's pretty big. You're down like 60% in a year. Holy. Yeah, that thing's cooked. That thing's cooked. I was trading 107 billion market cap. What the heck? I want to look at those real quick. I don't think. Let's see. Just look at their 10K. Come on, computer. You can do it. You can do it, computer. It's not that hard. Come on. Come on. There we go. Oh yeah, ServiceNow is extremely overvalued. They got decent stockholder equity though. Oh wait. 12 billion? Yeah, that's overvalued quite a bit. I mean, that's probably why it's down so much. But they have good net income, solid net income, consistently making like 1.5 billion or more. So, ServiceNow might be overvalued, but it's still solid. So not necessarily dying. The stock's dying, but the business seems fine. And then IBM, I'm sure this is fine. IBM's one of the top companies in the world, so I'm sure this is fine. Yeah, they made 10 billion last year. Yeah, IBM's dying. They made 10 billion last year, bro. Come on. This is why you got to get context. You can't just look at stock charts and make an opinion. You got to go look at the actual business. Like, sure, the stock chart doesn't look good, but it's probably just overvalued. 236 billion. I mean, what's their assets look like? Yeah, the stock's just overvalued. But not as crazy as ServiceNow though. But they don't have much stockholder equity, so it actually is pretty overvalued. But yeah, both decent businesses, just overvalued stocks. Not dying. Not dying. Down 15% is quite a bit though. That's a pretty big move. Pretty big move. Carvana, you want me to look at Carvana? Did they have earnings? They have a stock split on May 7th, but I don't think they had earnings. Their earnings is on the 29th. This is a late call. Yeah, for real. Super late. Doesn't even start till like 3:30 my time. That's super late. Usually 3's like the latest, I feel like. But that's good. Maybe all the fake traders will end their streams. Maybe they'll get impatient. Could be good for us. It's just I have no clue what we're gonna do for the next 50 minutes. I guess I'll just read some articles or something. I don't know. I guess that's a good idea. Kill some time. I mean, all the Avis shit's kind of just repeating the same thing, but I think I'll read this. AI podcast? What? What? AI podcast? Ooh, yeah, baby. Oh, yeah. All right. I guess we'll read some articles while we wait. All right. Meme stocks reappear. Avis shares reach new highs amid short squeeze. Can retail investors still buy? They have a little AI summary here. Avis's stock has surged over 200% in 6 weeks, driven by a capital-driven short squeeze resembling GameStop's 2021 event. A significant stake by Pentwater Capital, an existing large shareholder SRS Investment Management, has severely squeezed the free float, forcing short sellers to cover. This rally is detached from Avis's weak fundamentals, including revenue misses, a substantial impairment charge leading to a significant loss, and a high PE ratio with substantial debt. Analysts have downgraded Avis, questioning its current stock price, and warning of a potential bubble. Investors are advised caution, with stop losses recommended for current holders and speculative assets discouraged for risk-averse retail investors. I mean, if you have a stop loss, you probably don't believe in the investment. So at that point, I just, I don't know. I don't know how great it is. Could be a good trade though. I mean, it went from $800 to like $450 today. So, anyone who shorted that is crushing, but whether they take profits or not is a whole different thing. And we'll see if it keeps selling off or not. It could go back up, who knows. And then there's some key points here. Avis stock has surged over 200% in 6 weeks, reaching an all-time high of $713.97, driven by a capital-driven short squeeze resembling GameStop in 2021. I think the actual all-time high is like 820 or 830, something like that. A significant stake by Pentwater Capital Management and long-term shareholder SRS Investment Management has drastically reduced Avis's free float, trapping short sellers. Avis's short interest is estimated near 100% of its float, creating a battleground for bulls and bears, with potential for intensified short covering due to margin calls. Despite the rally, Avis's fundamentals are weak, with Q4 2025 revenue missing expectations and a $518 million impairment charge resulting in a 21.25 per share loss. Wow, that's a massive loss on EPS, I feel like. The stock trades at 175 times projected 2026 earnings with $6 billion in debt. Analysts find the current price unjustifiable by traditional metrics. Investors are advised to exercise caution for those holding, setting stop losses is crucial, and retail investors with low risk tolerance should avoid participation due to high speculative risk. Yeah, I don't know. I just whatever. I don't really agree with their recommendations on like stop losses and stuff like that. Like if you have a stop loss, you're just short-term trading it, so you're not an investor. You're just trading, so but yeah, I don't know. If you're an investor in that and you actually got a large portion of that squeeze and you didn't sell, that's savage. That's actually savage. U.S. car rental giant Avis is recreating the capital-driven short squeeze GameStop moment over the past 6 weeks. Avis's stock price has rocketed from a $100 range to an all-time high of $713.97, a cumulative gain of more than 200%. It surged 17.27% on April 21st, closing at $713.97. And yeah, like I said, in the morning it was trading at like $830. Pretty insane. But GameStop went up like 200x or something like that, so it's not anywhere close to similar to GameStop. Maybe the mechanics behind it could be similar, but the gains, not even close. As of today's close Eastern time, as of Tuesday's close Eastern time, the stock continued its rally, opening up more than 10% and hitting another record high, with its monthly gain reaching nearly 390%. I mean, that's still insane for a month. The reason behind the epic short squeeze of Avis Budget Group. In April 2026, Pentwater Capital Management suddenly announced it was building a massive position in Avis, with its stake quickly rising to 22%, with long-term major shareholder SRS Investment Management already holding nearly half the shares. The actual free float available for trading has been squeezed to the extreme. The high concentration of ownership has left short sellers in a desperate bind. As capital continues to pour in and the share price climbs, shorts are being forced to cover at high levels, a passive buying wave that is further fueling the upward spiral. In 2021, GameStop's short interest famously topped 100%. I think it went like to 200 or 300% or something crazy like that. Combined with retail investors banding together on social media, it triggered a cascade of short liquidations that sent the stock up over 1,500% in 2 weeks. The current squeeze in Avis is almost a carbon copy of that playbook. Yeah, just the gains aren't the same. But yeah, Avis is an interesting stock right now. Like I wouldn't, obviously I wouldn't buy it, or maybe I would day trade it, but I'm not gonna day trade it. But I think Avis will be an interesting stock to pay attention to, especially if they do an at-the-money offering or something and raise a bunch of money. Definitely could be interesting in the future, but while it's squeezing, I think the only opportunity is day trading it. Avis's short interest is now estimated to be near 100% of its float, making the market a pure battleground for bulls and bears. If the stock price is driven higher, shorts who haven't covered will face mounting margin call pressure, which could further intensify the squeeze. Weak fundamentals fail to support sky-high PE ratio. In stark contrast to the surging stock price, Avis's fundamentals are currently at a freezing point. Fourth quarter 2025 earnings showed revenue of $2.7 billion, missing the $2.75 billion expected by analysts. Due to the shortened service life of its electric vehicle fleet, the company recorded a massive $518 million impairment charge, leading to a loss of 21.25 per share for the quarter. A loss of negative 21.25 per share for the quarter. The first half of 2025 also saw consecutive losses. Wall Street analysts have recently warned that this frantic rally has become severely decoupled from business fundamentals. Avis is currently trading at 175 times projected 2026 earnings, and the company carries approximately $6 billion in debt. This is reminiscent of the bubble logic surrounding GameStop in 2021, where its market capitalization soared to tens of billions of dollars despite per-share losses. Yeah, I mean, I think this is just a good example of fundamentals don't necessarily matter that much, but through time, Avis should go back to where it is fundamentally worth. It's just, as of this moment, it's getting squeezed. Deutsche Bank analyst Chris Waronka stated bluntly that it is difficult to justify the current stock price using traditional metrics and a 12-month investment horizon, downgrading the rating from buy to hold with a price target of just $128. If you're trying to buy Avis for a 12-month investment horizon right now, that's ridiculous. Like I said, I think the only winners here are day traders. Maybe if you shorted today and you shorted $800, I bet you absolutely crushed today. But if you didn't take profits, where's it going to be at tomorrow? And then on the flip side, if you were a buyer, you're getting absolutely wrecked as of right now. If you weren't someone who bought in the $100 range or early into the squeeze, you're getting crushed. Amid the sustained rally, is it worth buying for retail investors? Analyst Dan Levi said the market finds it difficult to judge how much longer this rally can last and expects the stock price to eventually return to normal levels, especially if the company takes advantage of the rising share price to raise funds through a new share issuance, which I don't think they did. They should have, but I don't think they did. Historical experience indicates that once the long and short forces in a short squeeze rebalance, the bubble tends to burst much faster than it expanded. Yeah, usually short squeezes are pretty short-lived, so it's just a tough trade in general. In 2021, GameStop's stock price fell nearly 90% cumulatively just 4 days after peaking. This lesson is worth careful consideration for investors currently holding Avis positions. For investors already in the market, setting timely stop losses is crucial if sentiment shifts abruptly. For those on the sidelines, such assets are not suitable investment choices, as buying these meme stocks is more of a speculative act where high returns come with the risk of heavy losses, and the risk-to-reward ratio will be magnified given the current sustained rally. Yeah, there's no risk-to-reward ratio on Avis. You're just 100% just gambling. We still do not recommend that retail investors with low risk tolerance participate in the speculation of such assets. Oh, well, thank you, Trading Key. I appreciate that. That's pretty funny. All right. There's that. How much time do we got? 40 minutes still? Oh, later, Moose. Enjoy your sim session, bro. That'll be awesome. That'll be a good time. Oh. We still got 40 minutes, chat. How did that short do that I posted? Usually those tend to do okay. Yeah, not bad. 391. Yeah, win one day. That's funny. That's funny. Frickin' Tesla. Why do they have their earnings call starting so late? It's insane. I'll be right back, chat. Okay. Spirit Aviation holding spike 2. Sorry if that's old news. No, that's I saw that today. It's because the government said they were gonna back it or something like that. I don't even think Spirit's on the market, is it? It got delisted. Yeah, that's not even. I don't even think you can buy that. I think that's OT. I think that's over the counter. Yeah, pretty interesting seeing all these stocks squeeze. I wonder, do you think GameStop's gonna squeeze? I don't necessarily think that, but it'd be funny. I would actually not enjoy that. I'd be pretty frustrated. I mean, it'd be cool because you'd make a bunch of money really fast, but like, I wouldn't like a short squeeze because then, you know, it would make me want to sell shares, and I don't necessarily want to sell shares. But if the stock's short squeezed or something, I think you'd be kind of forced to potentially sell shares. Is Kohl's up? That undervalued stock that everyone hated on when I was talking about it? No, that's not up. What are you talking about? That's not up, bro. That's not up. It's probably up from when we talked about it because it was extremely overvalued when I used to talk about it, but it's not up. Not up today. Yeah, hit that like button. Hit that like button. Nobody hits the like button anymore, bro. Just kidding. We actually got a decent amount of likes today, but only because I had to ask for them. I wish this wasn't starting so late. Probably not gonna end until like 4:30. Ugh. Late earnings call. Really late. I'm gonna get one of my videos ready for editing since we got we got a lot of time. We got a lot of time. I'm actually just gonna edit the video for a second since we're just chilling. I don't know. Do you guys have anything to talk about? Is this the one? Is this the Seeking Alpha one? I think it's this one. Yeah, nice. I don't remember. Avis budget. I thought I messed something up on this though. I don't really remember. Really good article. That was awesome. No, just listening, working, paperwork. Ah, lame. Lame. Up 22% the past month. Good lord. Yeah, I mean, that stock, Kohl's was really undervalued when we talked about it like forever ago. They're probably having issues getting on the same page as always. Yep. Is what it is. It's all good though. It's all good though. I don't even know if hitting the like button necessarily does anything. Avis budget. Shorts are running out of options. Avis budget surged 500% in 5 weeks, driven by an unprecedented short squeeze rooted in extreme float mechanics. I thought I messed something up in this reading here. 2 hedge funds, SRS and Pentwater, accumulated over 100% economic interest via shares and swaps, locking up 82% of cars' float. Short interest exceeded available float, triggering a gamma squeeze, as dealers and shorts scrambled to cover, further fueling the rally. Despite macro tailwinds, car now trades purely on market structure, not fundamentals. Market. I should have said something about that market structure. I was like, Avis is not trading on market structure. Like Avis, there's no market structure on that fucking thing at all. Zero market structure. At $600+, neither long nor short is sensible. That's something I can agree with. I actually agreed with it? That's crazy. I didn't even know what I was doing when I was reading. I think if, unless you're day trading, I think there could be a lot of opportunity day trading something like this. But if you're trying to position, good luck, man. Good luck. That's a tough trade if you're trying to swing this. Avis budget closed at 608 on April 20th. Maybe I didn't mess anything up. All right. I guess I'll, I thought I messed something up, though. I thought... Is there, like, any long gaps in the timeline? Maybe it was a different article. Okay. Rip. I hate when these earnings calls start so... I think this is like one of the latest earnings calls ever, but I hate this. I like when they start early. Just too much time to sit here with nothing to talk about. Let's see. I need to see. Want to look at some analytics for a second. MGK made a video with a song with Fred Durst. Interesting. Where is it? Here it is. Has this hit 1,000 views yet? Oh no, it's kind of slowing down. Let's see, what's the reach look like? Yeah, just gotta put Avis short squeeze, Avis stock, car stock, stuff like that. Okay, easy enough. Easy enough. I do have to make a thumbnail though, which is always annoying. I really don't care for MGK much. He's alright. He tried to get in the beef with Eminem and then went pop afterwards. I think he has some okay songs. He's not like one of my favorites, but he has a few songs that I like. I do like Eminem's song, the Kill Shot or whatever it is. I do like that song. That one's good. Car Avis stock short squeeze. What was the title of that article anyway? Avis budget. Shorts are running out of shorts are running out of options. I don't want that. I'll just put how did a car Avis stock short squeeze, and I'll do question marks. I think that'll be it's not the best title, but whatever. All right, now I gotta make a thumbnail, bro. Ugh. When are we voting on the Ryan Cohen package? In June sometime. I don't even know if they've announced like an official date or anything like that. I think it's just June sometime. Alright, I guess I gotta make a thumbnail, which sucks. But I'll do it. I'll make the thumbnail. It's gonna be terrible because I don't necessarily... I might just steal a thumbnail. Avis images. I don't really know. I don't really have like a vision for the thumbnail in my head here. Guess we'll just do Avis budget. I don't know. This one's kind of funny. I kind of like this. I'm stealing this. I'm stealing that. Oh, that's from May 3rd. Yeah, I can steal that. I'm pretty sure. I can steal that. Oh, why is it so small? I thought it said it was like 1280 something. Come on. Did it not? I swear that said that was like a much larger image. Maybe we can do something with this. I don't know. I'm gonna cut the height a little bit. Perfect. Perfect. And I can do this. Do I still have that screenshot? Nice. Do that. And I don't know, dude. I don't know how to make thumbnails. I don't know how to make thumbnails. I'm just gonna do that. Shittiest thumbnail ever, but I honestly don't care. Or I'll do a what is behind the car Avis stock short squeeze. Or I'll do the catalyst of. I don't know, something like that. I don't fucking know. I don't know, chat. How much longer until this starts? 20 minutes! 20 minutes! Come on. Wonder what this would look like, actually. I want to see try to make another thumbnail here real quick. I'll do a crop. Then I have to make it wider. 1280. Boom. Oh, that actually doesn't really work. Man. Try that. Sorry, I'm not. If anyone's typing in the chat, I am not paying attention. I don't think anyone is, though. Crop. Boom. And then I can do this. That looks okay. I need to erase that though. Boom. Ah, I like that. I mean, I like that more than the other one I made, so we'll use that one. They're both not good, but at least this one's okay. There we go. All right. $16 minutes. Come on. And we've almost been streaming for 3 hours. Long stream. A long stream. Decent viewers today, though. The stream was dead for a while. Now we're at least getting viewers. And more people are sticking around for the stream as well, it seems like. Did I do a poll? Nah. I haven't done a poll in forever. 15 more minutes. Oh man. Taking forever. Yep. Yep. I just completely spaced out for a second there. There's just nothing to talk about. Someone, when I first started the stream, was talking about how they bet on Tesla earnings. They bet calls and puts. And they probably didn't profit. Can't really profit betting on... I mean, you can profit betting on both sides, but it has to move way more than the market thinks it's going to. If you're betting both sides on earnings, you're most likely not winning majority of the time. You would need like a... I mean, I don't know what Service Now was pricing in, but that was a big move. You would need something like that to actually profit. I don't know why people bet on earnings, though. Doesn't really make sense to me. I guess people just like losing money. That's must be what it is. They think they're gonna make money because they've probably done it before, but the odds are against you by a huge margin. So it's probably never gonna work out. By the time you win one, you've probably already lost like 4 or 5 of them and essentially just break even. So it's kind of a waste of a gamble. Nobody wants to trade properly. Nobody wants to just do some simple risk to reward day trades with a technical pattern that favors your trade. Like, nobody wants to do that. They just want to YOLO on something and hope they win. That's the education most people get in the stock market. It's like buy something over here, buy something over here. You know, buy like 5 things over here. Like, and then you're losing on like 4 positions and winning like 2. So it's like your winners never pay for your losses. Or if they do, you're pretty much just at break even, or your win isn't even that great. I don't know, man. The education on the stock market and the way people trade, it's just so bad, bro. It's just so bad. There's so many simple strategies you could just trade off of and have a way better chance at being profitable than just buying every random thing you see and hoping it works out. It's getting closer. Almost 10 minutes. We're almost there. We're almost there. Yeah, there's never anything relevant on Reddit, unfortunately. How is this not up yet? Crazy. Still going. Yeah, I'm just waiting for the Tesla earnings to start. They're taking forever. And the chat's dead, so we're kind of just chilling. Any Musk news? Oh, I have no clue. I have no clue. I see articles about him every now and then, but just don't really pay attention. I think the last thing I saw was SpaceX had it, or is filing for IPO or something, or they finally filed for it. I don't remember though. I don't really pay attention to Elon. I'm a business guy, I guess. You know, I like looking at businesses and numbers and stuff like that, news and whatever. I don't know. It can be interesting, but most of the time it's just kind of irrelevant. And even, even this kind of stuff is sort of irrelevant, but I find this information more valuable than what drama's going on with Elon, you know? He's one of the richest dudes in the world. He's probably always getting sued or something. Speaking of that, there is a lawsuit going on with GameStop. I was going to cover it, but I completely forgot about it, actually. It's been going on for a while now. I meant business news. Oh, yeah, I have no clue. I have no clue. Like, honestly, outside of what I do on stream, I don't research the market much. I don't research anything really. Like I'll watch like like gaming news and stuff like that. Like that's the type of stuff I'll watch off stream, but when I'm not on stream, I'm not really researching a lot of things. There's just no point. It's just a waste of time. Like when you're all in one stock, like researching anything else, it can be informative and you can learn something from it, but like in a lot of ways it's just a waste of time. Like if you're not going to put any action towards what you're researching, like it's just a waste in my opinion. Some people love it. Some people love it, but I just I don't. You know, back before we were all in GameStop and it's all I cared about. I mean, I don't know how long you've been in the stream, but I forget. But we used to research a lot. We used to research a lot of other businesses and do a lot more research, but I've definitely gotten lazy. The more and more money I put in GameStop, the lazier I get. I feel like I'm like probably the laziest investor ever. But it's funny because I'm probably one of the most successful investors. At least on YouTube. You know, there's definitely people out there who are way richer than me and way more successful than I am, but I'm probably like the most successful YouTuber as far as trading goes. And also the laziest, so it's kind of funny. It's kind of funny how that works. I mean, less is more in the stock market, from what I've, what I've learned. Less is more. I come here to get away from mainstream news and their shit. Yeah, I don't watch a lot of mainstream news either. It's just, I mean, I go through the same websites all the time, like Dexerto, whatever's on here, I'll look at. But yeah, there's a lot of bullshit on here too, like, so a lot of this is even just a waste of time. It's just, I don't know. If I wasn't such a brokey, I would go out and enjoy my life a little more, but I'm kind of a brokey. But I try to just, outside of the stream and making videos, I try not to, like, focus on the internet, what's going on and whatever. Like, I try to just enjoy my life as much as I can and still stay somewhat updated, Like, I'm still pretty up to date on a lot of things and whatever, but I am pretty lazy and try to just enjoy my time outside of the market or outside of the stream. That's why, I mean, honestly, that's why I don't stream 7-8 hours a day anymore. It's not only that I run out of things to talk about and whatever, it's also that, I just want to go out, enjoy, what's outside of the internet and outside of the stream. Like, of course I love the stream and it does get me down at times. There was that month-long period where I absolutely hated streaming, but yeah, at this moment, I stream for the people who come through. Like, if nobody showed up for the stream, I probably wouldn't do it. But yeah, besides that, I'm just trying to enjoy my time as much as I can outside of the stream and outside of, like, researching the market and looking at news and stuff like that. Just want to enjoy, I think that's the whole point of going all in GameStop, is so you don't have to necessarily care about what's going on. I think that's kind of the whole point of it. And same with, like, normal people who just buy the S&P 500. I think the goal of that is to just be buying something that you don't necessarily have to, like, care about or focus on. And that's pretty much how GameStop is for me. As long as GameStop's still growing and, doing their thing, I don't necessarily have to care, like, what's going on in the market or the news or anything like that. And I think that's a beautiful thing, because I think a lot of people put way too much weight on what's going on in the market, and maybe not the market. I don't feel like people are as into the stock market as me in a lot of ways, but as far as, like, news and stuff like that, what you're seeing, I mean, I don't scroll, like, shorts at all, so who knows what people are seeing, the people like the things that people scroll through on Shorts or TikTok or anything. Like, who knows what they're getting fed? Like I just try to avoid all that stuff at all costs. Been through all the ebbs and flows. I mean, yeah, you've been here for a good majority of it for sure. I don't remember when Ruben joined the stream. I really don't remember, but you've definitely been here for a long time. Pretty much since I started. It was you, Muma, and a couple other people. Obviously, Muma's gone, but so you're the only one who's really stuck around for a really long time. Well, there's also, like Stogie Stonks and Yo NSO and all the OGs from 2021. There's a couple OGs from 2021 that are still around. And I think Moose has been a member for over a year, so Moose has been here for a long time as well. What's up, Hugh? What's up, Hugh? How you doing, man? Over a year and a half, something like that. Yeah, I think my first GameStop stream was December. No, I think it was June 2024, and then I started the daily stream at December 2024 or something like that. Excuse me. Wait, how's it? Shouldn't this be starting? It should be starting, shouldn't it? It's still just dubstep music. Whoop, whoop. Oh yeah, I gotta turn my desktop audio on. More welcome, join and subscribe. Oh yeah, I mean, people are welcome. It's just I'm a tough personality. If you're coming to the stream just to listen and whatever, it's probably not as bad, but like I do tend to disagree with most things that people type in the chat. So I'm definitely a tough personality to get behind, that's for sure. But the only reason I'm so like I just don't disagree with a lot of the things people say, because I think a lot of people are misinformed, and like I was saying earlier, I think a lot of people's opinions and the things they talk about are driven through emotion, and it's tough to get behind something like that for me. Emotion's not that's a tough one. That's a tough one. Can't really get behind emotional opinions or whatever. I just can't. Alright, here we go. Is it finally starting? I don't hear dubstep music anymore.
Good afternoon, everyone, and welcome to Tesla's first quarter
There we go.
2026 Q&A webcast. My name is Travis Axelrod, Head of Investor Relations, and I'm joined today by Elon Musk, Vaibhav Taneja, and a number of other executives.
Enjoy.
Our Q1 results were announced at
I'll
about
catch
3
you
p.m.
guys.
Central Time in the update deck we
after
published
the
at the same
call
link
or
as this
tomorrow.
webcast.
God
During
bless
this
you.
call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events or results could differ materially due to a number of risks and uncertainties.
Yeah, I appreciate you,
including
Ruben.
those mentioned in our most
love,
recent
bro.
filings with the SEC. During the question and answer portion of
Later,
today's call,
Hugh.
please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. Before we jump into Q&A, Elon has some opening remarks. Elon?
Thank you. So I think we've got a very exciting year ahead of us with 2026. We're going to be substantially increasing our investments in the future, so you should expect to see a very significant increase in capital expenditures, but I think well justified for a substantially increased future revenue stream. And obviously, Tesla's not alone in this. I think you've seen in most, if not all, certainly the major technology companies substantially increasing their capital investments, and we're going to be doing the same. I think it's going to pay off in a very big way. So we're investing in and improving our core technologies: battery powertrain, AI software, AI training, chip design, manufacturing, laying the groundwork for significantly increased manufacturing production. We are also strengthening our supply chain across the board: batteries, energy, AI silicon, everything. And laying the groundwork, like I said, for what we expect to be a significant increase in vehicle production in the future, and of course, a very significant increase. Well, actually releasing Optimus, but increasing our internal production for testing, and then probably being able to have Optimus be useful outside of Tesla sometime next year. As you've heard me say a few times, I think Optimus will be our biggest product, not just Tesla's biggest product ever, but probably the biggest product ever. And I remain convinced of that conclusion. So on our vehicle side, it's always, I think, worth noting that a Tesla car is incredible value for money, and they're all autonomy ready, depending on what part of the world you're in. The supervised full self-driving is getting extremely good. We have just started production of Cybercab, and we'll begin production of our semi-truck soon. Now, I should say, whenever you have a new product with a completely new supply chain, new everything, it's always a stretched out S-curve. So you should expect that initial production of Cybercab and Semi will be very slow, but then ramping up and going kind of exponential towards the end of the year and certainly next year. And in fact, we'll be ramping up production of all vehicles in all factories to the best of our ability through the balance of this year. On the energy front, the United States and the whole world will need a lot of energy storage to meet growing electricity demand. Demand for our Megapack is very strong, and we're excited to begin production of Megapack 3 later this year in our new world-class factory outside Houston. For full self-driving and robotaxi, version 14.3 was a major architectural update, and we have a whole pipeline of major improvements to full self-driving that we believe will lead to unsupervised full self-driving being available anywhere in the world that it is legal to do so. And then there's a version 15, hopefully hopefully by the end of this year, but certainly by early next year, and that will be a complete overhaul of the software architecture, and will run on AI4. And that at that point we're really just increasing the safety level of FSD above human safety level even more. Meaning, I think even within version 14, we're significantly safer than human, but B15 will take that to another level. We've expanded robotaxi to Dallas and Houston using the same software source in the Bay Area, and the limiting factor for expansion is really rigorous validation, making sure things are completely safe. We don't want to have a single accident or injury with the expansion of robotaxi, and we have, to the credit of the team, not had a single one to date. And then Optimus, we're preparing Fremont for start of production later this year with Optimus. Again, totally new supply chain, totally new technology. So therefore, it's the production S-curve is always very slow in the beginning, but it will ramp up to significant numbers next year. And we're constructing a second Optimus factory at our Giga Texas location, and that will probably start production around summer next year. The V3 Optimus design is almost ready to demonstrate. I think we want to just make sure it's like polished. Like it works functionally, but there's some aesthetic elements that need to be finalized. And I think probably middle of this year we should be able to show it off. We're also a little hesitant to show V3 off because we find our competitors do a frame-by-frame analysis whenever we release something and copy everything they possibly can. So I think there's some value to, not showing new technology until it's close to production. Congratulations again to the Tesla AI chip team for taping out AI5. That's going to be a great chip. I think probably the best AI inference chip for edge compute that exists, and certainly, I think unequivocally the best value for money. Team did a great job, and we're already have a lot of momentum for designing AI6, and we've begun to discuss ideas for Dojo 3. So this is all very exciting. We've also finalized plans for the chip fab, the research chip fab on the Giga Texas campus, and we'll start construction of that this year. In conclusion, Tesla is working on a lot of large, ambitious projects. They're all very, very challenging, but I think they're going to be revolutionary. And this is what the team does best: solve the hardest problems and build amazing products. And I'd like to thank the Tesla team for all their hard work, and thank you to all of our supporters.
Great. Thank you very much, Elon. And Vaibhav also has some opening remarks.
Thanks, Travis. So 2026 has had an interesting start, not just for us, but I think the world in general. On the autos business, we have seen a resurgence in demand in EMEA and certain countries like France and Germany showing over 150% quarter-over-quarter growth in deliveries. In APAC, we witnessed growth in South Korea and Japan, again in terms of deliveries. Even out here in the US, we have seen a slight growth in terms of quarter deliveries. On the order backlog front, we ended the quarter with the highest Q1 order backlog in over 2 years. Whilst the recent increase in gas prices has had a positive impact on the order rate, this improvement started before the uptrend in gas prices. This is due to the work done by the Tesla team in bringing more compelling and affordable vehicles to market. 10 years back, when we launched Model 3 in the US with a promise of $35,000 starting price, which if you adjust today for inflation translates to about $48,000 in today's dollar terms, the starting price of Model 3 today is way less than that, while the product is way more compelling from where it started. Given this setup, we're focused on increasing our overall production volume, something that we already started in Q1. This volume increase is evidenced by the Giga Berlin reaching a record output of over 61,000 units in Q1. We plan to keep growing volumes further, not just in Berlin, but across all our factories. Our biggest limiter continues to be our battery pack capacity, and we are actively working on resolving that. Auto margins, excluding credits, improved sequentially from 17.9 to 19.2%. Note that we've had certain one-time benefits from warranty true-downs around $230 million and some relief on tariffs. We have not realized any benefit from the recent Supreme Court ruling on IPA tariffs, as there is still a lot of uncertainty around the final outcome. Both tariffs and sustained high interest rates continue to add to our automotive cost. Interest rate subvention costs are recognized upfront. If interest rates continue to rise, our cost of subvention will continue to impact auto margins. On the FSD adoption front, we continue to see improvement, reaching nearly 1.3 million paid customers globally. The bulk of the growth came from subscriptions, while upfront purchases only increased 7% as we removed the purchase option in some markets in Q1. We recently received approvals for FSD in Netherlands. This sets up us well for a EU-wide approval later in Q2, and we're just gated by how the regulators go about it. Additionally, we've also received approvals in China. The broader approval is still not there, but we're working with the regulators in the country, and we're hoping that we can get approval by Q3. With these approvals coming through, we expect the broader adoption of the software in the existing fleet and incremental demand for our vehicles. With all this in mind, we have evolved our vehicle sales strategy, where we now emphasize FSD as a product and vehicle as only the delivery mechanism. As we have noted previously, the energy storage business is inherently lumpy, tied to customer deployment timelines. In Q1, we deployed 8.8 gigawatt hour of energy storage, a 38% sequential decline. However, we still expect 2026 deployments to be higher than 2025. We set yet another record with gross margins in this business over 39.5% due to some one-time benefits from certain tariff recognitions of more than $250 million from certain tariffs which we had paid in prior quarters. On a normalized basis, we continue to expect energy compression from here with increasing competition and tariff impacts. As previously discussed, tariffs in this business can have outsized impacts as most of the battery cells are procured from China. Our order backlog for this business is robust, and we're doing our best to build not just based on existing demand, but also on expected demand. Services and others improved sequentially from 8.8% to 9.2%. This includes a collection of efforts meant to support our customers like service centers, used cars, paid supercharging, parts sales, insurance, and even our robotaxi business. We're making deliberate investments in the infrastructure to help the robotaxi in the future. We grew the robotaxi fleet quarter over quarter, and we expect to keep ramping the fleet as we accelerate and get into other geographies. On operating expenses side, we did increase sequentially from a full quarter stock-based compensation expense for the 2025 CEO compensation plan, for which one milestone is still deemed probable. Additionally, our spend on AI-related initiatives, including expense on development of our own AI-5 chip and new products like CyberCab, Semi, Optimus, and MegaBlock, etc., continue to be at elevated levels, and we expect this trend to continue for the full year 2026. Net income was impacted from mark-to-market charges on our Bitcoin holdings, which depreciated 22% as compared to the last quarter, and the unfavorable impact of FX primarily from our large intercompany borrowings. On free cash flow, we ended the quarter with just over $1.4 billion. As Elon mentioned, we are in a very big capital investment phase, which is going to start now and would last a couple of years. So based on that, our current expectation for 2026 is over $25 billion of CapEx. And, just to remind you, we are paying for 6 factories which were going to go into operation. Some have already started, some would go into operation later part of this year. We're further increasing our investment in AI-related initiatives, including the AI infrastructure to support robotaxi and the launch of Optimus. We've already started placing orders for the research semiconductor fab in Austin and for solar manufacturing equipment. While this may seem a lot, and we will have the impact of negative free cash flow for the rest of the year, we believe this is the right strategy to position the company for the next era, we'll make such investments in a very capital efficient manner. We're actively working on our mission of building a future of amazing abundance. However, that requires not just a lot of investment, but an immense amount of execution. The future is going to be great, and the whole Tesla team is rising to the occasion to make this a reality. I would like to end by thanking the Tesla team, our customers, investors, and vendors for having confidence in us on this journey. Thanks.
Thank you very much, Vaibhav. Now we're going to go to investor questions, starting with questions from say.com. The first question is, when will we have the Optimus 3 reveal, which we already touched on. But the rest of the question is, when will Optimus production start, since we ended the Model X and S production earlier than mid-year? And then what's the expected Optimus production rate exiting this year, and what are the initial targeted skills?
Well, as I was saying, what we found is that when we've unveiled various Optimus versions, we found out how competitors literally do a frame-by-frame analysis and copy everything we're doing. So I think we want to push the Optimus 3 unveil maybe closer to production. Start of production is, we're assuming, is somewhere around the late July, August timeframe. I mean, just to inject some reality into these questions, since these questions are not, whoever did this question does not fully understand what happens with a production line. The last SX production will be in early May, but you have to look at the entire upstream portion of the production line. So you have to start with, cells, battery packs, motor production, all the parts production. And so we've been dismantling the SX production line, from the more base level parts, the more basic level parts, to, as you get to more larger sub-assemblies, you start dismantling the line from the small parts first, not from the final assembly first. So the final assembly line will that'll be dismantled next month, and after the last of the SX vehicles done. Now you can't dismantle some gigantic production line like overnight. It takes at least a few months to do so, and then you've got to install a new production line, and you've got to provide all of the wiring and communication, test out the machines of the new production line for Optimus. So that also takes several months. So frankly, if we're able to go from stopping production on one line, dismantling that entire line, reinstalling a new line, and turning that on in a matter of 4 months, that is an insanely fast speed. I don't think any other company on Earth has ever done that before. Just to put things into perspective and inject some reality into the situation here. I don't know what the production rate of Optimus will be this year. It is impossible to predict these things. When you have a brand new product in an entirely new production line, and you have 10,000 unique items, all of which have to go right to ramp production, it'll move as fast as the least lucky, slowest, dumbest part in the entire 10,000. And this is Optimus is a completely new product with a completely new production line. So it's just literally impossible to predict. Except that I think it will be quite slow at first, as we iron out the 10,000 plus unique items that have to be sold for Optimus to reach volume production. Initial skills will be, obviously we're going to start with simple skills in the factory, and then build up from there.
Thank you, Elon. The next question is, what milestones are you targeting for unsupervised FSD and robotaxi expansion beyond Austin this year, and how will that drive recurring revenue?
Well, we certainly hope to have unsupervised FSD or slash robotaxi operating, in I don't know, a dozen or so states by the end of this year. Initially, we're taking it we're taking a very cautious approach to the rollout here. Like we haven't had any injuries and certainly no fatalities to date with the unsupervised FSD and robotaxi expansion. We want to keep it that way, and so I think probably unsupervised FSD or robotaxi revenue will not be super material this year, but I do think it will be material. It'll be material probably in a significant way next year.
Great. Thank you very much. The next question is, when do you expect FSD unsupervised to reach customer cars?
I'm just guessing here, but probably in the fourth quarter. It's difficult to release this like to everyone everywhere all at once, because we do want to make sure that they're not unique situations in a city that, particularly complex intersection, or actually they tend to be places where people get into accidents a lot, because they're just perhaps there's like I said, an unsafe intersection or bad road markings, or a lot of weather challenges. So I think we would release unsupervised gradually to the customer fleet, but as we feel like a particular geography is confirmed to be safe.
Great. And the next question is, how will Hardware 3 cars reach unsupervised FSD?
Unfortunately, Hardware 3, I wish it were otherwise, but Hardware 3 simply does not have the capability to achieve unsupervised FSD. We did think at one point it would have that, but relative to Hardware 4, it has only 1/8 of the memory bandwidth of Hardware 4. And memory bandwidth is one of the key elements needed for unsupervised FSD. And it's just generally a thing that's needed for AI. If you're doing an order-aggressive transformer, memory bandwidth is the choke point. So, for customers that have bought FSD, what we're offering is essentially a trade-in, like a discounted trade-in for cars that have AI4 hardware, and then we'll also be offering the ability to upgrade the car to replace the computer, and you also need to replace the cameras, unfortunately, to go to Hardware 4. So to do this efficiently, we're going to have to set up like kind of micro factories or small factories in major metropolitan areas in order to do it efficiently. Because if it's done just at the service center, it is extremely slow to do so and inefficient. So we basically need like many production lines to make the change. I do think over time it's going to make sense for us to convert all Hardware 3 cars to Hardware 4, because that's what enables them to enter the robotaxi fleet and have unsupervised FSD.
for what it's worth, in the meantime, we are going to also release a V14 version for Hardware 3. This will be a distilled version of the same V14 software that we released for Hardware 4. And people should be able to start the drives from Park State and basically have all the features that V14 for Hardware 4 has. And that's expected to come end of June.
Great. Thank you very much. The next question is, what enabled you to finish the AI5 tape-out early? And were there any changes to the original vision? Last week, Elon said AI5 will go into Optimus and the supercomputer, but 1 month ago said it would go into the robotaxi. Has AI5 been dropped from the vehicle roadmap?
Well, the reason AI5 tape-out finished early was because the team worked incredibly hard to make it happen. And just over time, we gathered a lot of momentum. But we did have to work every weekend for 6 months straight, including every holiday. So it was a lot of sacrifice by the team, and I was there, of course, myself every weekend. Fortunately, we didn't encounter any major. We didn't make any major mistakes at least that we're aware of, that required pushing out the tape out. So the team just did a great job and worked incredibly hard is the reason. Yeah, I do expect that AI5 will go into Optimus and into the data center, because it's looking like we'll be able to achieve unsupervised self-driving with AI4 that is far greater than human safety levels. So, which means it's not certainly not immediately needed in the car. At some point, I think it will make sense for us to switch to AI5 in the car, but but there's not a pressing issue to do so. But at some point, the AI4 hardware is going to get like so old that it's like, okay, the only reason they're keeping the factory open is for AI4. We are planning an AI4 upgrade to use newer generation RAM. So it'll go from 16 gigabytes to I think 32 gigabytes per SoC, so a total of 64 gigabytes, and probably a 10% increase in compute in sort of into trillions of operations per second and in memory bandwidth. So that's AI4.1 or AI4 Plus probably goes into production middle of next year, I think. Depends. It depends on Samsung's doing the modifications for us, so it sort of depends on when they're able to finish those modifications and bring it to production.
Great. The next question is, now that FSD has been approved in the Netherlands and is expected to launch across Europe this summer, can you discuss your robotaxi strategy for the region?
Well, we're probably jumping the gun here on robotaxi in Europe, since it took us an immense amount of time just to get supervised self-driving approved in Europe. And these we don't control the regulators. It's we push as hard as we can, but it's ultimately up to the governments in Europe and the EU to decide what to do. Yeah, as it is, we've only been approved in the Netherlands. We expect to be approved in a lot of other countries. And I think the supervised FSD goes to Brussels for EU review in May. Yeah. So. And obviously, then the next thing beyond that is to aim for unsupervised self-driving or robotaxi in Europe. I actually don't know what the time frame for that is, and would be somewhat at the mercy of the regulators as to when that approval would take place.
And from a technology standpoint, what we deployed in Netherlands and Europe is the same exact architecture and the training procedure and so on, except it had more Europe data. And I suspect the same thing will be true for unsupervised FSD as well. Whatever we use to solve in the US will work in other places in the rest of the world too, provided we were able to add the data from the local regions.
Great. The next question is, given the recent NHTSA incident filings, can you update us on the robotaxi safety data? If safety validation remains the primary bottleneck, why not deploy thousands of vehicles to accelerate removal of the safety driver?
Yeah, Ashok, do you want to take that?
Yeah, we are increasing the amount of our QA fleet, but we also want to use the customer fleet to give us the useful metrics back so that we can scale it safely. Like Iran mentioned, we are absolutely focused on safety, and so far we have 0 incidents, and that's what the NHTSA filing also shows. In addition to safety, we are also solving some of these so-called scaling issues. For example, you do not want the robotaxi to be stuck blocking intersections or don't want to be dropping people off at slightly incorrect locations and so on. So we are simultaneously solving the long tail of safety by monitoring the metrics across the entire Tesla customer vehicle fleet, which are is close to driving 10 billion miles on FSD in the next few weeks, and also scaling up the amount of QA fleet that we have across the entire US to accelerate our safety validation while also scaling the rest of the factors that can, throttle the increase of unsupervised vehicles.
All right. The next question is V14.3 still the last piece of the puzzle to enable large-scale unsupervised FSD and robotaxi, or do we have to wait until V15?
Well, no, I think 14.3 is the last piece of the puzzle for unsupervised FSD. Now, the question is like degrees of safety, like how safety and convenience, I suppose. We have a lot of known improvements, like major architectural improvements that we know would improve the probability of safety significantly. So I think it's not going to make sense for us to deploy, unsupervised FSD or robotaxi at large scale when we know that there are major architectural improvements to the software that can improve safety. So I think we're going to want to finish writing that software, validate it, and release it before going to large scale unsupervised FSD. Depending on what large scale means. I mean, we are, of course, as I mentioned earlier, doing unsupervised FSD in 3 cities, and we'll expand to, like I said, probably a dozen states or more later this year. So kind of depends on what your definition of large scale is. But
Yeah,
I do think it wouldn't be right for us to go to like very large scale unsupervised FSD when we know that there are software improvements in the pipeline that would improve safety.
Yep, and I'd like to note that the version of robotaxi that's running in Austin, Dallas, Houston, etc., those are essentially 14.3 variants, and it's obviously safe. That's why we're able to launch in those cities, and we continue to expand based on the V14.3 base for a while until V15 lands, and V15 is going to be a major upgrade.
Yeah.
Great, thank you. The next 2 questions we've already answered about robotaxi rollout and the data that we're observing. So we will end on the last question, which is what is Tesla doing to scale the energy generation business with solar? Residential roof deployments have stalled. Will Tesla move to regional solar and battery farms, perhaps coupled to superchargers? Will we deploy solar through utilities?
Yeah, the overall U.S. residential solar market is going through a bit of a correction after the loss of the homeowner tax credit last year, but we still see strong demand shaping up for the second half of the year. Tesla introduced a lease product this year that allows us to capture the tax credit ourselves and offer competitive pricing for homeowners. We have also debuted our own solar panel with superior performance and aesthetics, as well as our own best-in-class mounting system that gives us a fully integrated home energy ecosystem. We strongly believe that solar and storage markets globally will continue to grow at both residential and utility scale, and we will continue to invest in that growth.
Great. Thank you, Mike. So now we're going to move on to analyst questions. The first question is going to come from Will Stein at Truist. Will, please feel free to unmute yourself when you're ready.
Can you hear me?
Yes.
Yes, we can.
Great. Thanks for taking my question. Considering the various parties involved in the TerraFab project, I'm hoping you can provide some details for investors about which party is going to take responsibility for each aspect of that project, funding it, designing it, building it, operating, taking production, and the like. We'd love to hear some more details.
Yeah, so we're still working out the details of the TerraFab deployment. In the near term, Tesla will be building the research fab on our Giga Texas campus. This is something we expect to be probably, a $3 billion-ish initiative, and capable of maybe a few thousand wafers per month. But it's really intended to try out ideas, the research fab, both in terms of maybe we have some ideas for improving the fundamental technology of how chips are made, and there's some new physics we'd like to test out. But we also want to test out the ability to see if something is working in production. So you need kind of like a few thousand wafer starts a month to make sure that a production process is sound. And then SpaceX is going to take care of like the initial phase of the scaled up TerraFab. That's what we've figured out thus far. Any kind of intra-company thing has to be approved by both the SpaceX and Tesla board of directors. It's got to go through a conflict resolution. It's kind of unfortunately a lot of complexity because we've got to make sure Tesla shareholders are served and SpaceX shareholders are served and strike the right balance there. So it takes a while to work through the kind of independent director reviews on this. So that's basically what we've figured out thus far is Tesla's doing the research fab, SpaceX doing the initial part of the large-scale TerraFab, and then we got to figure out the rest.
Yeah.
And what about Intel's involvement?
So Intel is excited to partner with us on some of the core manufacturing technologies. So we plan to use Intel's 14A process, which is state of the art and in fact not yet totally complete. But given that by the time TerraFab scales up, 14A will be probably fairly mature or ready for prime time. 14A seems like the right move. And we have a great relationship with Intel. A lot of respect for the CEO, the CTO, and the new team there. So we think it's going to be a great partnership.
Yeah, and the other thing on the research fab, I think we've said it before, we plan to do memory, logic, everything in the same place, including mask, because we want to have a quick iteration loop so that we can see and basically scale the technologies which we're trying to bring up.
Yeah, I think this will be unique in the world, or at least I'm not aware of any a place where you have the lithography mask creation, and then logic, memory, and packaging in under one roof in one building. That's about the fastest I could possibly imagine doing recursive research and development, and being able to try out some pretty radical ideas, some of which have it's kind of long shot stuff, but if some of these long shots pan out, would be radical improvements in the way chips work.
Great. The next question is going to come from Pierre at New Street. Pierre, please feel free to unmute yourself.
Hey, thanks a lot for taking my question. A quick one first on FSD adoption. So you have 180,000 new users, paying users this quarter, and I compare that to your overall install base. It might be 15%, but then if I shrink that to the US or to North America, where most of them are, it's probably more like 30, 35%. And I compare that, you probably sold about 100,000 cars in North America in the quarter. So you're winning twice more FSD users and you're selling cars. And then if I add to that picture the fact that I guess it's mostly hardware for owners who subscribe to FSD, it sounds like most drivers in North America who have hardware for would already be using FSD. Is that the right way to think about it? And the kind of like success FSD is meeting today, is that the right way to think about it?
Yeah, I think you're thinking about it the right way, Pierre. And the other thing which I'll share is that, you can't just look at one quarter versus the other quarter in terms of churn, but we are actually seeing churn of subscribers also coming down, which again is a reflection of the product is getting better. And obviously, if subscriptions are going up, that is a good metric. The other thing also to note is that we are seeing customers actually drive longer, which again, you could correlate it. That's why you have lesser churn, because people are liking the product. And I've said this before, if I just use my own personal behavior, right? I literally get in the car, I press a button, and it just goes. And earlier I used to park, now I don't even have to park. And that is the experience which we want everybody to gain. And that's why you're starting seeing it in the numbers come through.
Excellent, thank you. And if I may, maybe a quick follow-up, completely different. It's more on the Optimus architecture. And you talked about the partnership with XAI and Grok. And I was wondering if you can share with us anything about how the system to intelligence is going to be implemented. Is that going to be on board on chips inside Optimus, or if we should think about like your fleet of like 1 million Optimus being produced a year, actually driving very significant inference demand in data centers as well for system to thinking?
Well, we think we can put a lot of intelligence locally in the robot, and certainly needs to be enough intelligence that if the robot gets disconnected, like if it's a bad cellular signal or there isn't Wi-Fi, Optimus can't just get stuck. It needs to have enough local intelligence that it can still do useful things, even if it loses connection. Kind of like the car. Like the car does not need any cellular or Wi-Fi connection to be able to drive safely. Now, I guess you can think of like Optimus needs kind of a manager to tell it what to do. Broadly speaking, like if otherwise it's going to keep doing the same thing it did before. So, I think you need kind of an orchestration AI, which Grok would be good for orchestration, and then for Optimus's voice, having a low latency, intelligent voice AI, Grok is actually very good for that. So if you want to talk to Optimus and have kind of a, you know, a Grok level conversation, you kind of need to connect to a Grok level AI for that. But I would expect the amount of interaction, apart from like the voice stuff and asking complicated questions of the robot that necessarily needs a large AI model to answer, Gronk would probably have about as much interaction with Optimus as a manager would have with the people on their team. So meaning Optimus could probably work for several hours without any management oversight.
Great. The next question is going to come from Dan at Barclays. Dan, please feel free to unmute yourself.
Great. Good evening. Thank you for taking questions. Elon, your chip suppliers generally generate pretty good economics on the chip they sell. Your approach has historically been on vertical integration. Part of that has been to get better economics. So I know the longer term goal of Terafab is to get the supply you need, but how much of Terafab is also motivated to get better economics on your midterm chip purchases? And how long is it going to take to ramp to get to a yield that achieves that type of economic parity?
No, I mean, Terafab is not some sort of mechanism to generate leverage over our chip suppliers. It's just literally we don't see a path to having enough, a sufficient quantity of AI chips down the road as we scale production to high levels. Just the rate at which the industry is growing in logic, but even more so in memory, is just doesn't. We just anticipate hitting the wall if we don't make chips ourselves. So that's the reason for the Terafab. I think that we do have some ideas for how to make maybe radically better AI chips. And these are kind of research ideas that are, which means like long shot, but if long shot pays off, it's maybe a giant improvement. And it's just easier to do that if we have our own research fab and are developing our own production technologies. So, and if you look sort of long term at, say having AI satellites, making chips for those, there's no way in hell the existing industry can keep up with that. It's impossible.
All right, and our next question is going to come from Mark at Goldman Sachs. Mark, please feel free to unmute yourself.
Yes, good afternoon. Thank you very much for taking my question. I recognize the importance of FSD and that FSD can help to drive vehicle sales, and nice to see some of the improvements in the FSD technology more recently with version 14. However, I'm also hoping to understand if the company's view on new vehicle models has evolved. And I ask, given that Elon, you posted on X recently that Tesla could develop a family vehicle, and there's also been some past discussion about a compact vehicle.
Well, I mean, Cybercab is the compact vehicle. It's actually, I mean, it's very roomy, but it's a two-person vehicle. And we do think probably most of our production long term will be Cybercab because 90% of miles driven are with one or two people. So it would mean that you'd want the vast majority of your production to be Cybercab. But over time, it's going to make sense for our whole lineup to be autonomous vehicles of different sizes. And I did talk a bit about this when we did the kind of AI day in LA at Warner Brothers, and showed like this is our current lineup, and this is what some idea of what our future lineup will be, which is that it's going to be almost entirely autonomous. In fact, long term, the only manually driven car will be the new Tesla Roadster. Speaking of which, we may be able to debut that in a month or so. it requires a lot of testing and validation before we can actually have a demo and not, have something go wrong with the demo. But I think it will be one of the most exciting product unveils ever. I'm not sure. I don't think it moves the needle massively from a revenue standpoint. But it is very cool. And I think it might be one of the most spectacular demos ever.
All right, Mark, did you have a follow-up question?
Yeah, thanks, Travis. My other question was on batteries, and the company mentioned batteries as a constraint on its growth. Can you speak more to how Tesla expects to resolve this, and to what extent that might come from ramping up your own LFP and 4680 battery cell manufacturing, or is this something that you'd expect to resolve primarily with increased sourcing from suppliers? Thank you.
Yeah, so at the moment, I think the limiter is not the cells itself, it's the battery pack capacity. And, we're, like I said in my opening remarks, we're actively working on resolving this. There's more capacity being added as we speak, and I'll let Lars add a few more things to it.
Yeah, thanks, Vaibhav. As you guys may have seen in Berlin, we started launching a Model Y battery pack with our in-house 4680 cells a few months ago, and that is ramping up nicely, adding to Berlin's output and helping with the demand surge that we've seen in Europe as well. We're adding additional capacity in our Reno facility, sort of retooling it as it's been building packs now for, almost 10 years. And in order to put in some more efficient lines and get, additional output out there. And then, we continue to have growth in China as well, ramping in-house LFP module production and battery packs associated with that. So all of those things are happening now and in the next months. And that's, really plans we laid out a few months back to increase that output with the growing demand.
All right, thank you guys. And our next analyst is going to be Colin from Wells Fargo. Colin, please feel free to unmute yourself.
Oh, great. Thanks for taking my questions. You moved the safety driver in Austin, and you're now expanding in Dallas and Houston. What are the key safety metrics that you're tracking that gives you confidence that robotaxi is safe enough to expand? Is it sort of miles per intervention, miles per accident, per fatality, and where do you stand on that now?
Sure.
Yeah, we track basically all the metrics that you mentioned. We have a pretty large QA fleet spread across all of the United States, and then we, look at any intervention that could happen, and then sort of simulate both in practice and also in our simulators that are very, very good nowadays using neural networks as what would have happened. And then based on all these analysis, we in the end make the call to expand. And so far, all of the expansions have gone according to our expectations.
Yeah, I should say, like a lot of what limits wider deployment of robotaxi are actually not safety issues, but convenience issues, or the car basically gets paranoid and gets stuck. Like sometimes it gets, because it's programmed for maximum safety. So the problem is that then it sometimes just gets scared to do things. So
Yeah.
like it sometimes gets scared to cross railroads, for example, or it'll get stuck at a light where there's the light never changes from red. Or there was one kind of amusing situation where a whole bunch of robotaxis got stuck in the left turn lane in Austin because, I kid you not, a Waymo had crashed into a bus. And so they could not turn left because the Waymo had crashed into the bus. And so you had this like long line of like, I don't know, a dozen or more Tesla robotaxis that were waiting for the bus to move, but the bus was never going to move because the Waymo has crashed into the bus. So that obviously drives people crazy if there's a whole bunch of robotaxis blocking the whole road. So it's a ton of things like that. That's the single biggest thing is just the car being scared to move or getting kind of stuck in situations like that. We've also had literal infinite loops where the car might want to make a turn into a road, but there's construction, and then it goes around the block, tries to turn into the road with construction, goes around the block, tries to turn the road. and and so you have to stop the infinite looping, literal infinite looping.
That's pretty funny.
So those actually, and those are by far the issues that we have to resolve, as opposed to direct safety issues.
Got it.
Great.
And then
did you have a follow-up, Colin?
just last year I asked about, FSD and camera and the issues with sun glare, and you noted that there was a breakthrough with direct photon counting that addressed this issue. But a month ago, there was a NHTSA filing saying that they haven't received an update when the solution was deployed and the number of vehicles. Did it require a retrofit of the camera? Is this fully deployed? I guess I was just curious since the filing mentioned it.
Yeah, first I want to say we did, change the cameras some months ago, and those are out. And the NHTSA flying is referring to like older vehicles. We always work directly with NHTSA on all of the issues that they raise with us, and they're asking for quite a bit of information, and we're complying with that in as timely a manner as possible. And so we expect to resolve that and any of the other investigations in short order.
Yeah, and we have also implemented stricter measures for the visibility of the camera. So in recent software builds, if the camera is not able to see things clearly because of residue buildup or whatever, then the FSD won't be available for those cars.
It just needs you have to clean the inside of the windscreen.
Great. That unfortunately is all the time we have today. We appreciate everyone's questions, and we look forward to talking to you next quarter. Thank you very much, and goodbye.
Thank you very much. Thank you. Thank you. That's pretty interesting. Feels like it's going to be a big year for Tesla. Feels like it's going to be a big year. At least, I guess I should say a big next couple of years. But appreciate you guys being here. Make sure you hit the like button on the way out. Is there anyone even here? 'Cause I'm probably out of here. I imagine there's nobody here. It says there's 17 people here, but it doesn't look like there's anyone here. So, I don't know. But if you are here and you're an OG, I appreciate you. Thanks for always supporting the stream. If you're new, I appreciate you giving the stream a chance. Oh, what's up, AA Ron? What's up, bro? It's been a long stream today, though. Over 4 hours. So, well, I gotta go anyway. Going to Chris Webby tonight, which I think we're leaving here in like an hour or something. I need a new clip now. It's all good. It's all good. You're right, though. I do need a new clip. But we got one for Intel. Intel's tomorrow, so we'll do a clip for Intel. But yeah, I'm out of here. Later, Aaron. Later, Slevin Snipes. Appreciate you stopping in for the earnings streams, bro. Isaiah, if you're still here, much love, bro. William. Later, bro. Appreciate you always coming in for the earnings streams. Ruben, if you're still here, much love, bro. Appreciate you always supporting the stream. Hugh and Hugh G. I don't think you guys are here still, but I appreciate you guys. Moose isn't here anymore. I don't know who else is here, but I appreciate you guys. I hope you have a good rest of your day. And I'll catch you guys tomorrow for Intel earnings. So, you guys have a good one. God bless ya. Peace!